be Today is going to be taking us on understanding money and financial institutions. Samuel, if you can hear me, please, you can take it up from here. Thank you.
You're welcome. Good morning, everyone. It's good to have all of you on the call, and greetings from Ghana to each and every one of you. Today, we'll be taking a very important topic, understanding money and financial institutions. And I believe you have your writing material, you have your notepad, something to take note because money is so important. If you are in Nigeria and you don't have money, you know how frustrating it can be. Sometimes you see how the mate is wrestling with you for 1,000 naira or 2,000 kobo. So money is so important. So in today's class, we'll go deep into how to understand money and financial institutions, either the bank system, either we are doing a transfer. How do these things operate? Because it's very important to understand this, whether as a business person or as an individual. So if you work in a corporate office, if you have your own business, understanding this topic is so important and so key. So I'll ask all of us to give our full attention in today's class. Make sure you fill the attendance, as Mercy said, so that we can know who joined. I'm sure along the way, people will also be joining. So in today's class, we'll look at a comprehensive understanding of money, banking, and financial institution. You know, in Nigeria, we have so many banks. We have Zenith Bank, we have First Bank, we have GT Bank. All these banks have a structure and a system by which they work. And it's important that we understand how these financial institutions operate. We'll also begin with the fundamental question: what is money? And will trace its evolution from ancient barter to digital currency. What this means is that previously they were not using money. And you can see how by the day, even cash is going extinct. So now there's so many cryptocurrency. People are moving from the physical cash we do to transfer. So you can meet someone, they don't have any cash in their pocket, but they want to do a transfer. So gradually we are going digital. So we'll look at how money has evolved throughout all these years. Then we'll also examine how the central bank manages the economy through monetary policy tools. So the government also has monetary policy tools they put in place to regulate our finances. So you realize that the president comes to read the State of the Nation address, or the governor comes to tell us the economy of the state, so that we are able to know the economic monetary tools the government is putting in place. Then we'll also explore the full ecosystem of financial institutions, who they are, what they do, and how they differ. So every financial institution has how they do their things. Every bank has how they operate. OPay has how they operate, different from Pound Pay. And everyone has their charge. So if you are not going to use OPay and you are going to use Pound Pay, what is influencing that decision? So we'll look at all this. This unit will also cover the safety net, protecting depositors, and the global banking framework and enabling international trade. Sometimes you hear reports where people use their Visa card or their MasterCard and they were involved in theft. How was that information leaked? Or how did whoever had access get that information? We'll look at all these things and then we'll conclude by analyzing the tools and trends that digital banking seeks to offer. So now, for instance, most of the banks have integrated AI into their banking system. So if you go to the bank's website, you realize that there's a robot you can interact with and it will give you real-time feedback. Once you send a message, the robot is going to reply or the bot is going to reply. And by the end of today's class, I believe every student will be able to analyze financial news, evaluate banking decisions, and understand how money moves through the global economy. And in today's class, I want it to be very interactive. So if you have a question, you note it down or you prompt me by raising your hand in the chat section, and then we'll take questions as well. I would like to engage all of you. So I would like to find out from you at different times what your opinions are, what your thoughts are on different subject matters. So I think we can go into our learning objectives for today. So today we'll look at a foundation, and today's class has been broken down into very simple terms such that anyone who joins today's class should be able to know what money is, because money is important. The reason you are going to school, the reason you are working, the reason you are doing everything is because of money. Or is there any other reason? Can I know, Godwin? Do you have any other reason you are doing what you are doing? Is it your love for the country? I believe it's because you want to make money and make life comfortable for you. So we'll look at the definition of money and explain its six key characteristics. So today I've put down six key characteristics of money. So we'll delve deep into that. Then we'll also describe the three core functions of money, and we'll all give examples, all of us on this call, because money has a function. Is money just supposed to be used in buying and selling, or beyond that, there are other functions of money? Then we also explain the structure and the mandate and the tools for the Federal Reserve. You know, the Federal Bank has a reserve where all our money is kept as a country. So, what is the structure the Federal Bank uses? They will analyze how monetary policy affects the broader economy. A lot of times, people don't see that the decision the government makes, or every decision the governor makes concerning that state, will end up affecting us. So if the government increase fuel prices, it will have a toll on your business. If you are going to pick that keke, if you are going to pick that okada, you realize that the price has gone up and it will affect your business. So the monetary policy of the government is so important. Then from the foundation, we'll look at the institution. So we have different financial institutions, we have the banks, we have the fintechs, we have all these things. And we'll break them down to identify and differentiate how the commercial banks work, how small scale businesses work, and how credit unions and non-banking institutions work. Also, we'll explain how each institution serve different fragments of the economy. Not everyone has a smartphone and can access all these banking apps. Some people are in rural areas that don't even have electricity, so they cannot do transfer or they cannot go to the bank. So they might use a credit union, they might use a credit system. So it's important to understand that all these financial institutions are important. You cannot say because you are doing transfer, no one should go to the bank, and you cannot say everyone should also go to the bank. There's a credit union, there are different non-banking institutions which serve different people. We'll also look at how insurance works. These days, insurance has come to stay. And whether we like it or not, it's important that we know how insurance works and why it matters. Some people think insurance means they are just taking your money. Insurance important? Can I know? Does anyone here do an insurance? And do you think it's important? Can I find out? You can please unmute or indicate in the chat section. Do you think insurance are important? Having a personal insurance, a life insurance, do you think they're important? Anyone? Pretty Beauty, Folawi, do you think insurance is important? Can I hear from you, please? Because it's an online class, I would like us to get interactive. Yes, I'm listening. Do you think insurance is important?
Yes, sir. Insurance is important too. Health
Mm,
insurance, whatever insurance, it's very important.
Great. Thank you so much. So, like she said, insurance is important. And in today's class, we'll look at some of the importance of the insurance, because as you are walking on the street, so many people approach you, do insurance, do insurance. Why do we do insurance? And how are they even regulated? Because someone can take your money for insurance and run away. Because sometimes you don't always meet them in the office. You can meet them along the road, you can meet them at an event, you can meet them at a conference. One time I came to Transcorp in Nigeria and someone approached me that I should do an insurance. So how am I going to know and validate that this insurance I'm really doing is genuine. That's the importance of joining today's class. We'll dive deep into all these subject matters. So today's class is very important, and I believe we are going to learn so much, which is going to impact us both knowledge-wise and in a practical way. So I'll be sharing my screen very soon. Just a second. I was just giving a brief summary so that we understand how today's class will go. So I'll be sharing my screen shortly. Just hold on for me a few minutes. Just a second, please. I'm trying to share my screen so that we can all be on the same page. All right. Can you see my screen now? So we are looking at today's learning objective. Can I know if you can see my screen, please?
Your screen is visible, sir.
All right. Thank you. So let's continue. So we are looking at, for the financial institutions, I mentioned how insurance works and why it matters. That's the third objective. And also we'll evaluate and look at the protection offered under various ownership categories, because every business, every individual, there are different policies that regulate every business. So in the financial institution, they have what regulates individual businesses, what regulates private businesses, what regulates government businesses. So we have to understand all these things. Then we'll look at the global future, which is so important, because at the end of the day, whatever we do in Nigeria will still be affected by what goes on the global market. So we'll analyze international banking mechanism. Sometimes you have a relative who travels to Canada or to America and they want to send you money. Do you know how SWIFT works, how trade finance works, how forex trading works? These days, a lot of people are going to forex trading. Do you really understand how it works? Or your friend just comes to you and says, "Oh, pretty palo, there's forex trading. Give me 10,000 naira. I'll multiply it." And some people get on board, and that's how they dupe them of their money. I believe no one here has been a victim of such scam. If you have, I'm very sorry. Maybe perhaps you should have waited to join this class before you engage in that activity. They will also explain the roles of IMF, the International Monetary Fund. It's so important. The World Bank and also BIS and Basel Accords. All these are international bodies that regulate the finances. So it's important to understand how they work. We evaluate how digital fintech works, how AI and crypto are transforming finance, because whether we like it or not, AI has come to stay. A lot of times I hear people say AI has come to take people's job. I don't think so. I think AI has come to improve our work we do. Because regardless of what happens, humans created this artificial intelligence. So we have to regulate it. So I always tell people that artificial intelligence is not bad. I don't think it's an enemy to our work. It's rather here to improve it. But if you don't develop yourself, if you don't develop your skill, that's when you think AI is bad. But I don't think AI is bad. I believe some of you, before you even join today's meeting, you have to engage ChatGPT or Grok or DeepSeek or Claude AI. I mean, that's my personal favorite AI. One way or the other, during the course of your day, you engage AI. Why? Because it's important and it's transforming our financial space. Then lastly, in today's class, we'll assess the implications for Nigeria and emerging economies. So Dangote is in Nigeria. Now Dangote says, I'm expanding. I want to go to other West African countries. What is influencing his decision to move out of Nigeria and go to Ivory Coast and go to Ghana? There are different economic factors that come to play. So show me the money I put here. We have come to understand what money is, how it works, and why it matters. So let me find out from anyone on this call. If someone asks you what is money, what are you going to say? What is money? What do you define as money? Anyone can please volunteer and answer. What is money? Is money what is in your pocket? Is money what is in your bank? What is money? How will you define money? Pretty Palo, you like to try? It's because your name is on my screen. That's why I keep calling you. What is money?
It's
Okay,
pretty
so
beauty.
someone
Pretty
else
beauty.
wants to say
Sorry.
something.
All right.
Beauty,
Oh,
please
sorry.
go ahead.
I wanted to say money is a legal tender that is used in exchange for goods and services.
Excellent. Very accurate. This one is the one Oxford Dictionary gives us. All right. Mercy, you wanted to say something?
Okay, she has said it. Money is the medium of exchange for goods and services.
Great. Very excellent. That shows we are all in. So, like they said, that is what money is. So, I define money here, and I think we should all take note of the definition as money is anything that is generally accepted as a medium of exchange for goods and services, and that serves as a measure and store of value. So, like they all said, money is anything that is generally accepted. So that means what we regard as money in Nigeria might not be regarded as money elsewhere. So in Nigeria, we have all agreed that Naira is a common tendency that we are going to use for exchanging of goods and services. If you go elsewhere and they say, okay, we are using dollar, you cannot go to America and say you want to use Naira there. Why? Because it is not generally accepted. Do you understand? So there must be a general acceptance. That's what you should note here. All the people there, all the people in the community have agreed that when we use Naira, that is the accepted medium of exchange for goods and services. Some people only use goods, but you see, apart from buying goods, there are services. For instance, if Pretty Beauty comes to braid your hair or comes to do your makeup for you, it's a service she's providing, and you have to pay for it because makeup is not cheap. And it serves as a measure and store of value. That is very important in our definition. Why? Because sometimes you want to save money, let's say in the bank. You want to save money in the bank and you don't want the money to reduce. So maybe this week, for instance, maybe your salary will be paid. And it's important that once it's paid, you want to keep some as savings. So you store it as value. So you are keeping that money in anticipation that one day you'll be able to use that money to buy something. So money is not just the coin and the paper in your pocket, because some people say money is cash. Money is not just cash. You have to see the broader picture of what money is. Anything widely accepted as payment. So the most important thing is that the people should have accepted that they are all going to use the money. Also, its value, it's entirely social. So money works because we collectively agree that that's what we are going to take. So a good example is if we all come together on this call that in our class the medium of exchange is paper. In this class, that means when we join this call and we want to make any payments, we are all going to use paper to make that particular payment. And because it is accepted by everyone, we all accept that as our money. So you go elsewhere and you realize that what we call money here in Nigeria is not the same thing they also call money. They have what they regard as money. Before money, economics relied on barter, direct exchange of goods requiring a double coincidence of want. Very good definition. So let's say Daniel Kenneth is on this call and Daniel wants to buy a car from someone. Instead of Daniel having money, all Daniel needs is, Daniel will say, in the olden days, they used to do butter. So Daniel has sugar and Daniel wants a car. All Daniel will do is he will exchange the sugar for a car. And because it is generally accepted as butter, the car will be sold to Daniel and it's considered as legal tender. Back then, that was their mode of transaction. But people realized that butter wasn't really effective. So now what did they do? Now they realized that they'll need correct means of farming because they were cheating people. Imagine a farmer needing shoes and you had to find a shoemaker to fix your shoe and you give the shoemaker rice. One person will eventually end up being cheated. So what happened? We needed to streamline and have a mode of tender that is generally accepted by all people. That's when money was introduced into the equation. So money came to solve that problem, but by acting as a common intermediary. So now there's a common value. You want to buy food and the food is 2,000 naira, 3,000 naira, and then we all agree that that money is being sold at that particular price. So you pay 2,000 naira for the food and food is given to you in exchange. So whenever you buy something, whenever you transact like that, money is used. So money came to solve that problem because else people would have been cheated. Imagine you want to buy something and the person says bring salt and the person will end up taking a car or something. I don't think that's fair. So that is what money is. So we've seen that money is not just the coin and the paper we have in our pockets. Money goes beyond that. So let's take note of what money is. So let's look at a quick evolution of the history of money. So money has evolved even before we came into the picture. So the first place you see money evolved is in 3000, before Christ, before Jesus, they used barter economies. So how do they used to buy things? Because there was no naira then, there was no dollar then. So how were they buying things? They were using barter economies. So they trade with grain. So if you have rice, if you have maize, if you have cowpea, you can exchange it with cattle and cloth. So the exchange was direct. There was no bank. There was no transfer. If you want to buy something, you go to the person and tell the person that I have one cow. I want to marry your daughter. That's how they will just exchange you for marriage. But we realized that it wasn't efficient. It was never efficient because money evolved to solve real world transaction problems. So at each stage of economic development, we had to find a common denominator we all use. Then we moved to 600 before Christ. So at that time, Jesus had not even come. They moved to metal coins. Sorry. It was introduced by Turkey, the country Turkey. So we used to use a coin called Lydia, and it was standardized and portable and durable. That was the first universal money used in the world. So all across the world, there was metal that was used as money. But just imagine using metal as your means of transport. Your pocket would be so heavy. Mr. Daniel, just imagine walking around with so many metals in your pocket. Even with the kobo we have, we don't want to use it. Even with the paper we have, the cash we have, we don't want to use it. So you are walking around and you have about 1,000 metals in your pocket, which was called Lydia. So we realized that it's not enough. We needed some form of money that is lightweight, that is easy to carry about, because the metal is such that even if you meet a magnet, just imagine you have so many in your pocket and you come into contact with a magnet. That's how the money will just leave your pocket and get attached to the magnet. Then in 1200 after Jesus came, China is the first country to introduce paper money. So take note of that. China first introduced paper money. They are the ones who first brought paper money into the picture. And they had a representation of gold and silver held in their reserve. So China realized that carrying a metal in our pocket is so heavy. Why don't we look for a paper that can be globally accepted? Then they introduced paper money. And in 1913, the Central Bank of America created its first fiat currency and financial stability. So that was when the dollar was being rolled out. So we realized that instead of having just the coins, we can add paper. Then in 1971, gold standard were abolished by America and they started officially using the dollar. And it was backed by government and public trust. Very important thing you should notice that initially, when they were doing all these things, what was happening was that it wasn't backed by any government. So Mercy can be in her house and decide to print money herself and use it as a mode of exchange. So you realize that there won't even be anyone who is poor, because when you need money, you can just go print your own money and start using it. So there were so many inconsistencies, there were so many irregularities. We needed an authority and a government to streamline these operations. Then in 1971, the government had to say, okay, now we are the only ones going to print money. So money will come from the federal bank. That's how things began to work. And then in 2009, which is our present age, we've realized that there's been a lot of transformation. Now there's a digital revolution, there's mobile money, there's online banking, there's Bitcoin, there's transfer. So money has evolved. Truly, money has evolved over the years. And now, my major question to all of us is, after digital money, what do you think will come after digital money? Right now, there's PayPal, there's PalmPay, there's OPay. Do you think any money will come after this again? What's your thoughts on this? Do you think money is going to change again? Because gradually cash is going extinct. How many people hold cash? You even get cash. A lot of people want to do a transfer. So do you think from this digital transfer phase, we'll go into another phase? Can I hear from anyone? Anyone? What are your thoughts on this? Because CBDC's centralized crypto was also invented. So I just want to find out, do you think any other form of transaction will come either after this digital phase? Mr. Daniel, can you share a few thoughts on it? Do you think any other currency is going to come we are going to be using? All right, Isaac. Isaac Asari, please, you can go ahead.
Yeah, so thank you very much for the presentation. So I'm suggesting the chip that will be implanted in man, probably that will be the end time. Probably that's where most transactions will start emanating from.
Great. And you know, China has started implementing it. Thank you so much, Mr. Isaac. China has started implementing it. So now, even when you are walking, a chip has been embedded into your body, and you walk and you just put your hand on the machine, and the machine recognizes you. So it's being rolled out. Here in Africa, it's not being rolled out effectively because of religion or because of Christianity. So there's some form of opposition. But in the outside world, I'm told it's being implemented. So let's see. And like Mr. Isaac said, that is just an indication of the end time. So let's continue with our studies. Let's look at 6 characteristics of effective money. There are 6 main characteristics of effective money. And here I put them into the physical properties, trust and value properties. And why these 6 are important? Because you have to understand that these 6 properties is what defines what money is. So the first one is money must be portable. Money must be portable. It means it must be easy to carry. 1,000 naira note beats a cow for a convenience. So just imagine that those times they were using barter trade, or back in the years when they were using barter trade, you want to buy something and you have to take a big cow from your farm all the way to the shop. Can you imagine it? That would be so ridiculous. Or you want to buy something and you carry a goat and then you go exchange it for salt. But now we have 1,000 naira note. So if you want to buy something, all you have to do is check your wallet or do a transfer. Money must also be durable. Durable, because the money is moving from one person to the other. So it must be durable. Money shouldn't be easy to tear. So you realize that when the money gets old, the central bank will go back and change the currency. It should be durable. It should be able to withstand repeated handling, because paper notes should be able to last for years. So the material used for money is of good quality. Who can tell us the material used in printing naira? Anyone? So let me just help you. The Nigerian naira is primarily printed using high cotton fiber paper, often mixed with lining and other fibers to ensure durability. And just imagine, even with that, sometimes it gets torn. So it's of high quality cotton fiber paper. That's what we use to print money. And then the central bank disburses it into our account, into the system. Then money must be divisible. So you must be able to split money into smaller denominations. So the naira is able to be divided into kobo. The Ghana cedi is able to be divided into pesos, so that we're able to price things. So if you go to a shop and they say something is 1,200 naira, you can present 1,000 naira note. If you present 2,000 naira note, they'll give you change of 800 naira. Why? Because money must be divisible. Imagine money was not divisible. Everything will be 5,000 naira, everything will be 2,000 naira, everything will be 10,000 naira, water will be 1,000 naira. We can't live. So money must be divisible. And the central bank is able to regulate all these things. Then money must be stable. It should not fluctuate. So that's why inflation comes to play. You realize that when inflation goes up, everybody in Nigeria is angry. Everybody. When fuel prices goes up, everybody is angry. Why? Because money must be stable, so that when you are doing your business, you're able to do it well. Imagine importing things from China or from Temu. You paid so little to bring it, or you paid so much to bring it, and now prices fall. So you have to sell it at a lesser price, and you end up running a loss. So money must be what? First, portable. Second, durable. Third, divisible. Fourthly, it must be stable. The fifth one is money must be scarce. And this one, I want all of you to listen attentively. Supply must be limited. That means not everyone should be able to print money. Because I believe if we could all print money in our house, all of us won't even be on this call. Oh yeah, now we'll all be rich. Because if you need money right now, Mr. Isaac, you just go and take his printer, take an A4 sheet, print 10,000 Ghana cedi. He will spend for today. Tomorrow, if he needs money again, he goes to print again. Sister Mercy needs money. Sister Mercy just goes to take A4 sheet, prints 5,000 naira. If it's not enough, she prints another 10,000. So money should be scarce. That's why in Nigeria, the only accredited body for printing our money is the central bank. In Ghana, is the Bank of Ghana. They have the sole responsibility. else money will become worthless because it will be common. Then money must be acceptable. Money must be acceptable. That means it must be universally trusted and received by all. That's why sometimes somebody buys something with counterfeit or fake money and they are being reported because it's not acceptable. That means you are trying to cheat the person you are buying from. And it's important you don't cheat people. So let's look at why all these 6 are important. So let's look at something like Bitcoin. Bitcoin is portable. So there's Binance, there are different trading platforms. Bitcoin is durable. Bitcoin is divisible. But you realize that Bitcoin is not stable. So sometimes Bitcoin can go high, sometimes it can go low. If you have friends who do forex trading, they'll tell you it vacillates. I one time tried forex trading here in Ghana and I lost all my money. Ever since then, I told myself I'm not doing it again because I didn't understand how it works. But people do trading and it works. Then you realize that it is not widely accepted. Not everyone accepts Bitcoin for now. So if I come to your shop and you ask me that, how will I pay, cash or transfer, and I say Bitcoin, maybe you sack me because you don't take it. But you realize that as the years evolve, things are changing. Then you look at another example is gold. Gold is durable, gold is scarce, gold is stable. But gold also has a shortcoming. Gold is not portable or divisible for all our daily transactions. Imagine Folawi wants to buy something and Mr. Folawi or Mr. Folawi goes to a shop and they ask you how are you going to pay, or Pretty Beauty even wants to pay for something and they ask how she's going to pay and she says she's going to pay with gold. Gold is not widely accepted, so she cannot use that for her day-to-day activity. Or Mr. Rick says he wants to pay for something but he wants to use gold. Because it's not widely accepted, that gold cannot be taken. However, if you go to a jewelry shop or a goldsmith and you say, oh, you want to sell that gold, he can accept it because he understands the value of that particular gold. So the Naira, like you can see, meets all these 6 and is backed by CBN, which is the Central Bank of Nigeria, because of the credibility and the government authority. So you realize that the government of Nigeria or the central bank is able to regulate the amount of money that is in the system. So each characteristic solves a specific problem that the earlier forms of money couldn't solve. Because when we started, we looked at how money came from in 1900 BC. The Bitcoin analysis is excellent, like we've discussed, but you realize that, like Brother Isaac said, things are changing. It's also false and it's not stable, and not everyone even accepts it. Gold also has a problem. That's why we use Naira as the form of our daily exchange in our country, Nigeria. So let's go on to see the 3 core functions of money. I hope I'm not moving too fast, because today's class is very practical when it comes to subject of money. We don't rush it because everyone is looking for money. I hope I'm going at a very good space. You are learning. Can I know, please, as we continue?
Please continue, sir. Thank
All
you.
right, thank you. So today we'll continue with the 3 core functions of money. That means every effective monetary system must fulfill all these 3 simultaneously. The first one is money is an exchange of medium, and you should write it down. What this simply means is that the main function of money is exchange of goods and services. So money acts as the intermediary in every transaction. You cannot say you want to buy something, you will not pay for it, they should just hand it over to you. There will be some form of exchange. Even if you are buying on credit what happens is, even if you are buying on credit, because of trust is the commodity we use. So eventually you will pay, but you tell the person that, okay, give me on credit. Oh yeah, I'll pay next week or next 2 weeks. Then the person trusts you and gives it to you. So money acts as this intermediary. Without it, we won't be able to do transactions. So money eliminates this friction entirely of wanting to do something and you don't know how to do it. Imagine you are in Abuja, you want to go to Lagos, and you want to board a bus, but you don't have money. You can't go, you have to trek. But once you have money, you can even go by air. And money is what is used for this exchange. The second thing is, money is a store of value. That means money allows us to save purchasing power for future use. So let's look at a good example I put here. A farmer sells grain in October, can hold money until January to buy goods. Inflation erodes this function and deflation strengthens it. So when you are paid your salary, you buy everything, you use the money. Sometimes you put some aside. Why? Because you want to save, so that later in the month when you need that money, you can make that withdrawal. So that's part of the importance of money. It's a store of value. So we're on this call, I can ask maybe Isaac, how much do you have in your Ghana CD? I can ask Pretty Beauty, how much do you have in your Naira account? Why? Because she has stored some money. And I'll encourage everyone, even as we join these classes, make sure you save. One time I was reading a book on financial literacy, and the author said something that has stuck with me many years. He said, the money you save today will save you tomorrow. And how true that is. Sometimes you fall into trouble, sometimes something happens to you, and you need money. And you are wondering, why didn't I save when I had a lot? So I'll suggest savings. This is not a savings class, so let's continue. Money also has a core function of unit of account. Money provides a common unit for all pricing of goods and services and enabling comparison, budgeting, accounting, and economic planning. Without it, prices will be expressed in countless commodity ratios. Let me break it down and make it very simple. All this means is that every item has a value, and that value is valued in monetary terms. So if you want to buy bread, they will tell you bread is 500 naira. Why? Because if we don't put a price tag to it, when someone comes, someone will buy it for 500, someone will buy it for 200, someone will buy it for 1,000 naira, and there won't be consistency. But because of money, we're able to price things. So all these three functions, they are interdependent. So I'm just mentioning to you individually, but everyone depends on each other. And the monetary system must be understood. So you have to understand inflation, you have to understand hyperinflation, you have to understand deflation. So I put a real example here. During Nigeria's high inflation period, the naira still circulated as a medium of exchange, but its store value of value function was severely compromised. People converted wages to dollars or goods immediately. So there was a time the Nigeria naira went up so high, such that if you keep the naira, your money will reduce. What it means is that if maybe today 1,000 naira can buy you food from a good restaurant, when inflation happens, you cannot even buy that same food again. So the thing that was 1,000 naira suddenly is 3,000. So you just keeping the money is losing its value. So you should understand all these structures, and you should know how to price your things when it's time for hyperinflation and deflation. So we'll look at the different types of money, from the commodity to the digital. Let's quickly look at the different types of money. The first one is commodity money. So I put down 5 types of money generally in the world. There's first of all commodity money, which has intrinsic value independent of its use as money. Example, people keep gold coins, silver bars, salt, cattle. In the ancient times, that means the value of the cow is the value of the money they have. So if I come to you and I say I have 10 cattle, I might not have cash in my pocket, but that means if I sell the cattle, the money I'll get from the 10 is the money I have. So there's no value to it. So if the price of cattle goes down today, that means my money has reduced. If the price of cattle goes up tomorrow, that means my money has increased. Then also we have representative money, which is a claim on a stored commodity. So usually it's with regards to the government. We have gold certificates that represents gold held in the fortnet. So some people want to save so much that they keep money such as gold in large quantities in reserves, federal reserves. But that one, you cannot use it for your day-to-day activity. So you cannot say you have dollars in or you have gold in the Federal Reserve. So today you want to buy something, you go to the bank or the CBN and you say they should break a small part of the gold you are going to use to buy something. No. Usually those ones are long-term investments. That's representative money. And then we also have fiat money. That's what we use. So that is a legal tender. So it's called fiat because now the government regulates that kind of money and it has government backing. So for instance, the American use the American dollar, Nigeria we use our naira, there's the euro, there's the pound, there's the Ghana cedi, there's the French CFA. All these things are fiat money. That's what we use. And what fiat means is that the money we have is based on the value of the currency in our pocket. So if you have $100, if you have 10,000 naira in your pocket, that means that's the money you have. Unlike having a cow where you now have to sell the cow and now know the money you have, this one you're able to tell. And that is used in our day-to-day activity because if you walk to a supermarket and you see the price 2,000 naira, you can count 2,000 naira or do a transfer of 2,000 naira and pay. And now we have electronic money or mobile money. So that's the 4th type of money, which is a digital representation of the fiat money. So now the banks all do transfer. So there's mobile money, there's OPay, there's Kuda. And all these payments platform, there's M-Pesa in Kenya, there's MCM mobile money in Ghana, there's Vodafone Cash in Ghana. There's Paystack, there's Money Points, all in Nigeria. So when it comes to these ones, there's no physical money exchange. You do a transfer and it's accepted once the person receives the money. We've already walked through the evolution story of money, so we know how at each point they had a constraint and all what this money is coming to do. Like we said, commodity money was too heavy to carry about. Imagine walking around with a metal in your pocket. That's a lot. We also look at representative money, which was convenient, but it was constrained because you cannot break gold into small pieces and be using it for buying items. Then now we have cryptocurrencies and CBDCs, which is the decentralized cryptocurrency such as Bitcoin. And now blockchain wants to regulate this one because whether we like it or not, these cryptocurrencies are coming to stay with us. So now there's the e-Naira. China also has an ECNY, which are all government issued. And this is how money has evolved over the years. So these are the types of money and you should take note of them. Then we have to understand the supply of money, or what I call the money supply. So I group them into M1, M2, and M3. Narrow money is cash in circulation. So that means you have to go to the bank, you have to make your deposit. And in M1, it's more liquid. That means that money is in your pocket. Right now, if I tell you to send me 100 naira, you can easily send it. Why? Because it's available. That's M1. Then you look at broad money, which is M1 plus the savings account plus small time deposit and market money. Usually, you don't have easy access to it. So maybe you do a fixed deposit in the bank or you do a treasury bill. It's still your money, but you don't have access to it. So when you want to withdraw, it might take time. Then we have M3, which I call the widest measure of money, which is last time deposit or institutional market funds. So example is you buy shares in a company. It's your money, but you don't have full-time access to it, even though it's your money. Then we look at the US M2 supply, which I don't think we can relate because it's a government policy where we look at how government makes a lot of money from their various policies. If you are here and you haven't filled the attendance form, I'll please ask everyone to kindly fill the attendance form because attendance is very important and it's part of our assessment in our class. The link is put in the chat section, so everyone should kindly fill out the attendance form. So now let's look at the Federal Reserve System. How American Central Bank manages money, the banks and the economy. And don't say, why are we on this call talking about America? It's important because it has a ripple effect on what goes on in Nigeria, whether we like it or not. So let's look at that. What is a Federal Reserve System? And it's very similar to the banking system used in Nigeria and in most parts of the world. So the central banking system of America was established in 1913. I don't think anyone here was born. That's a lot of years ago, over 200 years ago. And it was responsible for conducting monetary policies, supervising banks, maintaining financial stability, and providing financial services. So, in as much as they are banks, these banks are also being regulated by the federal bank. So, it was created by the Federal Reserve, backed by the American Constitution in 1913, and was a direct response to panic in 1907 when JP Morgan's personal intervention prevented Americans' financial collapse. Because those times there was no money. So whilst preparing, I was reading about it and I came across an article where, because there was no dollar, people used to cheat people. So someone is going for a loan and they ask him how he's going to pay, and he says that, oh, I'll come and pay. Maybe you go for a loan of, let's say you are buying a house and they ask you how you pay, and you say you use salt. When you look at the cost involved in building a house, how are you going to even use salt as a measure of exchange? Then you realize that it was a problem and the central bank had to come in. So the functions as the banker's bank. So the Federal Reserve is called the banker's bank because they are in charge of the bank to regulate all these banks, and it operates independently of the government. They work with the government, but the central bank operates independently of the government, and they report to the Congress, and it serves as a lender of last resort. So if right now CBN says they don't have money at all, they'll go to their Federal Reserves, and usually your Federal Reserve is not kept in the country. So a comparable institution in Nigeria is the Central Bank in Nigeria, established in 1959, performs identical functions. So in Nigeria, CBN is our federal bank. And it's important that we understand how it works. It's like they monitor the banks. They check what the banks are doing. Are they operating within the confines of their work, or they are doing things as they want it? So let's look at the structure of a Federal Reserve System very quickly, like I've shared on the screen. Usually, it contains board of governors, it contains 12 Federal Reserve banks, and it has Federal Open Market Committees as well. So let's look at the board of governance. The first thing you see is that it comprises of 7 members appointed by the president and confirmed by the Senate. And it is targeted with a 14-year term to ensure political independence, because different governments will come, APC will come, another political party will come, but because they work independent of the government, it's important that the board of governors are independent. Then also they set reserve requirements, and also there's always a chairman for this. Then also quickly, let's look at it serves 12 geographical districts. That's in America. So in Nigeria, every state is being served by the federal bank, and in America, New York is the most powerful market, and they conduct open markets daily. So they monitor each bank's activities, and they employ economists who produce research information for decision making. So before President Tinubu make any decision, there are people who have done research into every economic policy they are launching. And also there's the Federal Open Market Committee, which is also an important part, and they meet at least 8 times per year to deliberate on matters that are going on in the country. So every country has this framework they operate by, because they are going to take decisions. So all these decisions must be based off of data they have. Now let's look at the Fed's monetary policy tools. We have an open market operations where there's buying government securities. So you can buy government treasury bills, you can buy government bonds. These are open market operations. Then we have reserve requirements. That means the bank will tell you that there's a minimum deposit you can hold on to. So from bank to bank, so you realize that Parallax Bank has a very low deposit rate. So a lot of people are moving to Parallax Bank because they feel it's convenient. Then also bank have a discount rate for their loan and their interest rate. So every bank, what happens is that the federal bank will give a threshold. The federal bank will say, okay, every bank, the least interest rate you should give is 10%. So some banks will have 12, some will have 11, some will have 15, depending on the bank. And all these are monetary policy tools that must be put in place by the federal bank. They have 2 main mandates from the constitution. The first one is they are supposed to provide maximum employment, which I don't think they are doing. But it's not today's class, we'll do politics. Because after NYC, it's important that the federal banks make money available such that the graduates are able to be employed. So they are supposed to create conditions for as many people as possible to be productively employed. You realize that many young people are working on the streets and they don't have jobs. Does anyone know the employment rate in their country? We have different people from different countries. Who knows the employment rate in Nigeria as at 2026? The last statistics came out in 2004. Who knows it? Anyone? You can check ChatGPT, I mean, from the International Labour Organization. You can just check it. The unemployment rate in Nigeria. Please, can we, just so that there's some form of engagement, anyone can check and give us a response, please. Please, anyone to check for us? Pretty Beauty, please, can you check for us, Pretty?
As of which year?
What's the current one you have, please?
So I'm coming. Wait. In Nigeria, right?
Yes, in Nigeria. Mr. Isaac could check for us for Ghana as well.
It's 75.7%.
That's very
As
high.
at 20, as at 2024, though.
Okay, thank you so much. I think that's very high. That means a lot of people don't have jobs. So if the central bank doesn't provide measures, the theft and the crime rate in Nigeria will always be high, which is not the best because they have gone to school because they told us that education is the key. So after university, you went to Unilag, you went to now university, you want to finish school and get a job. But now people have finished school and they are not getting jobs, and it must be addressed. Isaac, do you know what about in Ghana? Isaac Asari, can you check for us?
It's 14.7%.
I think that's much better. It's not the best, but it's better. So that means, in as much as we're also joining this class, let's look at entrepreneurship opportunities. Because if we keep saying that we are waiting for the government to provide jobs for us, we might never have those jobs. So if you can braid hair, if you have a skill, maybe you're a photographer, you're a graphic designer, keep doing it well. You can sew because we need to employ people. So we'll look at a good example is COVID. Rates were cut off to provide employment. Some people lost their job when COVID happened because all over the world there was lockdown, and some people never returned to their jobs. So today, I hope none of us was a victim. So then we'll also look at the stable pricing. Stable pricing, that is one of the permanent acts by the federal government. So they target inflation, they also look at deflation, and they look at the high pressures in purchasing power. Then we also look at personal consumption expenditure. I wouldn't want to bore you with all these things because they often relate with the government. But let's look at the Federal Reserve's responsibility. What are their main roles? The first one is they are supposed to supervise and regulate banks because the federal bank is a regulator. So they set all the legal compliance methods for all the banks in Nigeria, in Ghana, in Kenya. There's always the federal bank that regulates it. So CBN regulates all the banks in Nigeria. The Bank of Ghana does same for Ghana. Their other responsibility is financial system stability. So they are supposed to monitor systemic risk across all the financial systems and conduct a stress test. Because some of the banks might be doing things that are wrong. So it's important that the federal bank regulates all these things. Then we also have payment of services. So you cannot walk to CBN and say you want to open a personal account with CBN because it's regulating the country's money. So if Nigeria goes to borrow money from IMF or the World Health Organization, they'll pay that money to the central bank, which is CBN. Then also they serve as reserves between countries. So between America and Ghana, they'll liaise and use that particular system. So these are the four main responsibilities of the Federal Reserve. Let's look at the US financial institutions quickly, and then we'll go for a break when it's 12. Mercy, please, am I right?
Yes, please.
All right. So let's quickly go through the US financial institutions. Then we'll go for a break and then we'll come back because I don't want to load you with so much information. I want you to be impacted by today's class. I want you to take something home after today's class. So the first thing you should know is that the financial institutions are not there to harm us. So I'd like to find out, where do you bank? Where do you bank? What bank do you use? Can I know from some of you, which bank do you use? And why did you choose that bank? So maybe your parents forced you, or maybe you were in school and they told you to come and open an account. Where do you bank? Can I know? Where do you bank? Or you just keep the money under your pillow?
Access Bank,
Access
First
Bank.
Bank, Keystone Bank, a lot of them.
Wow, you have all these banks. That's great. Anyone else? I had Access Bank. I had First Bank.
I
Anyone
have
else?
GT Bank. I
You
have
have GT.
GT Bank. I have Zenith Bank. I have FCMB Bank. FCMB.
Great.
And I have OPay.
Or pay for transfer, fast transfer.
Yeah,
Great.
fast
Thank you
transfer.
so much. So you realize that there are different banks. Thank you so much, Pretty Beauty. There are different banks, and all these banks have their competitive advantage. All these banks have what they do well. Some have good digital banking platforms, some have ATMs all over the country. There are different reasons why we chose the different banks we use. So we'll look at how these financial institutions are being regulated and what their core function is. So the first thing you should know is that their main function as a bank is financial intermediation. Financial intermediation. So the process by which a financial institution collects funds from surplus units, that's you and I, we are the savers, and channel them into deficit units, earning profit on the interest rate, is what we call financial intermediation. Let me break it down and make it very simple. You know the money you keep in the bank. Once you make a deposit, all the bank does is they record it and also give it to someone. So the 5,000 naira you put in the bank, when you go and withdraw, they will not give you those same notes that you deposited 5,000. We are keeping Pretty Beauty's money, particularly in this shelf. They will also give it to someone, but there will be records. And that's how the banks operate. So they operate with our money. So that's why you realize that if no one goes to make a deposit in the bank, then the bankers, there's pressure on them. That's why they always want us to open accounts. Because they want us to bring our money so that they can use it to give loans, they can use to run activities and now get interest. Because sometimes what happens is people don't want to use the banking system, but it's important because imagine someone keeps their money at home and there's a fire outbreak. That means all the money is lost. But when you keep it in the bank and there's an issue, you can still retrieve your money. So small lenders, what happens is we all go and make a deposit and now it makes it a larger sum. So the bank is able to create money through lending. And this is why money creation is very important. So you go, you make a deposit, they record it in your account, it reflects on your phone, either via text message or SMS or email. Then now they also give it to someone. Or you buy a treasury bill, or you buy a fixed deposit. The bank also use that money for that period of time and later get profit on it. Let's look at how commercial banks also operate. First of all, what are commercial banks? For reason of today's class, I defined it as for-profit corporations chartered by federal, national banks or state governments, and they accept deposits and give out loans. Their primary goals is to generate returns for stakeholders. So when it comes to commercial bank, like they mentioned, Access Bank, Zenith Bank, GT Bank, you can walk into these banks. First Bank, you can go to First Bank and say, I want to create an account. It's a commercial bank. It's not a federal bank. So you can just walk into that bank and make that deposit. They also provide different services such as checking of savings accounts. They also open personal and they give out personal and business loans. They give out credit cash. They have wealth management systems. They also give treasury services. Maybe you want to buy a treasury bill, you have some money and you want to invest. You can go to a commercial bank that they should help you. So in America, there's an example of JP Morgan. It's a bank in America. He's the owner of Chase Bank. And this bank is a commercial bank that has a primary mechanism to give loans to individuals in America. So the banking system is all over the world and they are always regulated. So, for example, it's regulated by the Office of the Controller of Currency, and in every state, there are federal reserves that regulate these commercial banks. Also, there are saving institutions, and we cannot talk about financial institutions and not talk about these saving institutions because they are also important. They are important because not everyone can walk to the bank. Not everyone is educated. Not everyone is in the urban part of the world where they have access to internet and all these things. So it's important that we understand how saving institutions work. The first thing is Savings and Loans Association. It's an established financial institution for households to save. So sometimes you realize that instead of a group of people coming together to do contribution, you can say, okay, we are doing the contribution, but we'll go through a savings and loans institution. So they collect all the money for you. And whenever you want to make a withdrawal, you can go for it. And it usually takes short-term deposits made from long-term investment. So sometimes when you even put this money there for savings, the Savings and Loans Association or group, they go invest it for you so that you get interest. So for example, in America, in 1981 to 1982, the interest rate spiked up so much that you couldn't even go for a loan at the bank. So what people now do is that they go to these savings and loans associations to borrow money because their rate is lesser. So savings and loans is not entirely bad. And they also have bodies that regulate their activities. So apart from the central bank, other bodies also are in charge of these savings and loans. So let's look at a few lessons and legacies quickly. It says Savings and Loans Association crisis is a masterclass in the dangers of deregulation without adequate risk management. Savings and loans were afraid to take risk when they lacked expertise to manage, because when it comes to savings and loans, it's very strategic because you cannot give all someone's money as a loan and now the person comes, I want to withdraw my money. They tell the person, oh, your money has been given as a loan. No. So how to diversify the funds, how to disperse them and still have money to run their savings and loans is important, because modern savings banks have diversified but remain smaller than commercial banks, because they are savings bank, but they might not be like a commercial bank, because the commercial bank, the interest rate is high. It's very high. Then I will look at credit unions. We'll look at credit unions. Are they important? Yes, they are. I think they are. Today's subject is very important. As we go along this class, I want to remind you that today we are learning understanding money and financial institution. And it's important as a business person. Maybe you cannot relate as of now, but later, maybe if you start a business, you're in an organization, you want to take a loan, you know which financial institution to talk to. That's why this topic is so important, understanding money and financial institution. Because some people even have the money and they will tell you that maybe I have 4 million naira, I have 5 million naira, and I want a business to invest in. They don't know about such financial institution. They don't even know how to invest these monies. So we are privileged to be learning about these things so that we can manage our finances well. So credit unions, very important. What are they? Credit unions are non-profit cooperatives owned and governed by their members because there are no shareholders to pay dividends. Surplus earnings are returned to members through better rates and lower fees. So, for example, if all the students in today's Transformation College business class says that, okay, in our diploma in entrepreneurship and management class, we all want to form a cooperative, that means we'll all donate money, give it to Sister Mercy to keep for us. Then we start a credit union. So whenever somebody needs money, you go and borrow. So every week, every month, depending on the structure we have, we'll donate or we'll give for it. And because this one is owned and managed by us, at the end of the year, whatever money we have, we'll share it amongst ourselves. And usually you must be a member to be able to enjoy. So once you're a student, for example, we'll say then you are part of these corporate unions. So you realize that credit unions are a living proof that financial institutions can be structured differently. And the non-profit one is not even charity. It's just different in the ownership model. So this one, when it comes to credit union, we cannot say it's for one person. Sister Mercy cannot say I'm the owner of the credit union. The whole class, the credit union, we own the credit union. And it has advantages. So let's say loan rates are typically lower than commercial banks because we all give for it. So if we all say we are all donating 5,000 naira or 10,000 naira for our cooperative, when you want a loan, it will be easier because one of our classmates wants a loan. So we'll give it to the person. You pay interest, but it's very little. So sometimes people prefer the credit union. There are some organizations, they have credit system, and people prefer that one than going to the bank. And you see, the bank where you don't pay because sometimes they take a collateral and all that, it makes it very, very hectic. Then let's look at regulations and insurance. These savings and loans and credit unions are regulated by the National Credit Union Administration. So even before you start a credit union, they have a regulatory body. Because if we don't do it that way, we all contribute the money, give it to one person, and the person can run away. The person can run away. So we even have to know which regulator controls credit unions. And I said it's the National Credit Union Administration. Now we have non-bank financial institutions, and I've displayed some here. So I'll mention a few of them and then we'll discuss. Before we started this call, we looked at insurance. It's important. Insurance important, and we all agree that yes, insurance is important. So what are insurance companies? Basically, insurance companies are non-financial institutions. What does it mean? It means they serve as the shadow for banking system. Every human being has a shadow. Every bank also has a shadow. So that's where the money to the bank comes from. So insurance companies collect premiums, invest them in bonds and equities, and pay out as claims. That means they collectively manage a lot of money in assets. Plenty people or a lot of people don't like insurance until there's an issue. Some people feel like, well, I pay insurance. What if nothing happens? What if something happens? You know, insurance is a risk. I believe you're learning. Insurance is a risk. Sometimes, yes, the insurance companies do make money off our money. But the day there's an issue, that's when you realize insurance is important. I remember so well having a car, and when I was going to insure the car here in Ghana, there's a comprehensive and there's a third party option. If it's third party, if you're involved in an accident, no one pays. You pay for it, and the money you pay every 6 months is very little. Then there's comprehensive. The money involved is a lot. Maybe in naira, we are talking about 150,000 naira. And I think that's a lot of money every 6 months. And that means when the car gets damaged, they'll fix it for you. If you are torn between the two, I'm sure everyone will choose maybe as the other one, you're supposed to pay 5,000 naira against 150,000 naira. A lot of people will take the 5,000 naira because the money is small until the person is involved in a car accident and the person now sees the importance of the other one because the company will fix the car for you in full. Then we also have pension funds. So before you go on retirement, you can give your money to a pension funds to manage the money for you. So apart from what you pay to the government, there are private pension funds, which are also long-term investments. So once you start working, you can put every month, you can let them take some money for your pension so that when you go on pension after 60 years, you still have some money. There are also mutual funds, which is a pool of money from investors to buy diversified portfolio. Sorry. So there's Fidelity Mutual Fund, there's Vanguard Mutual Fund, there's BlackRock, and there are different mutual funds. So you can go online and find out about these mutual funds. And these are good investment platforms. And don't say you are too young or the money is never enough. A lot of times when I engage some young people and I ask them, do you save? They say, no, but I'm not working. You're not working, yet you eat. So the money is always enough. The money is always enough. I always tell young people the money is always enough. You are not waiting for 1 million naira to save. You can start saving with the 500 naira you have. Then we also have private equity, where we invest in non-public companies. We structure them and sell them. And then we'll look at financial companies that also give loans without taking deposits. So we have loan companies as well. And now we have fintechs, which have come to stay with us. Fintechs have come to stay with us. So we have Klarna, we have Lending Club, that's P2P, we have Sophie, we have different ones. We have Azapi, we have Pound Pay, and all these are fintechs that have come to make life easier when it comes to our money. And then as well, we have fintech that help us send money. So there's SendWave, there's Tap Send for those who receive money from abroad, and all these things are non-financial institutions which serve as the shadow for our banking system here. Great. So let's continue. So let's look at the credit union against the commercial bank. So here I made a comparison. If you are to go commercial bank or you are to go credit union, what are the advantages you will be getting between the two? The first one is ownership and purpose. So I put here that when it comes to banks are primarily for purpose because the bank has employees, the bank has staff, the bank is renting a building, the bank has a lot of expenses. So their main primary focus is profitability. And they also have shareholders that they have to pay return to. However, when it comes to credit union, like I mentioned, there's no owner and they don't have to pay shareholders returns. So it's easier because we all vote on the decision. So a good example, like I mentioned, is this whole class has a credit union where we contribute money. What happens is that maybe someone needs money in the class. We'll just tell Sister Mercy that Sister Mercy, this person needs money. So when we come to the class, we all vote. Should we give Princess the money? If they say no, we won't give her. If we all agree that we'll give Princess the money, we'll give it to her at a small interest. Also, banks are accessible to everyone and everyone can walk in and open an account. However, when it comes to credit union, you must be qualified. So there must be a common bond. So for example, we are all students. We can come together, maybe in your job place, in your organization, in your community. There should be something that brings all the people together when it comes to credit union. Also, let's look at the bank rate and the fees. Bank rates are driven by profit target. So the bank wants to hit their profit target. So they can have a high interest rate. However, when it comes to credit union, because it's not a profit-seeking organization, the interest rates are low and the profit we make, we share it amongst ourselves. So the rates are low. Then we also have insurance and regulation. I mentioned that both the bank and the credit unions have their regulators. So they are all being protected by different regulators, and they all have services they provide. What the bank does, the credit union cannot do. And what the credit union does, the bank also cannot do in full. So you realize that the bank's core banking services are their primary focus. But a credit union doesn't have that as their core focus. They want to give out credit. So a credit union doesn't even need a branch. They can do it online, but a bank will need a branch. They'll need ATMs. They'll need digital platforms so that that bank can be effective. Let's look at one more topic before 12, and then we'll go for a break. I know it's a subject of money, so we are all listening attentively, but after 2 hours, I think we should all get a break. You stretch around, you use the restroom, and then we come back. So let's quickly look at insuring our bank deposits. And this is something people don't even know, that when you go and deposit in the bank, you can insure it. So just imagine, what will you do if you wake up one morning and your bank has failed overnight? And the bank says, okay, we won't pay you. What would you have done? Can I know? If you wake up one morning and today Zenith Bank or Access Bank says, we are leaving Nigeria, it's all over the news, they are no longer working, what will be your next point of action? Are you going to sue them, or you go to a native doctor? Anyone, what will you do if your bank says, and they've declared bankrupt, so they don't have money to pay you? What would you have done? Or anyone can
You
just
will
feel free to
definitely sue them.
you sue them for your money. And they say they don't have money now. They are bankrupt. So how will they pay you?
For me, I would definitely forget about it because sometimes most of these things, if you say you want to sue them, how will you be doing? You would you be going to court every time? Do you have the money to spend going to
Pay
court
a
to sue
lawyer,
a bank?
yes.
You just have
Absolutely.
to just accept your fate. That's just it.
All right. Thank you so much. Very excellent answer. So I'm not saying that to say the banking system is not good, but I'm trying to bring to your attention that there are risks involved in our banking systems. And whether we like it or yes, we have to come to those terms. So it's important to ensure our bank deposits. So we'll look at America's deposit safe net, and then we'll streamline it to Nigeria or our respective country. So the first thing you notice that the America Deposit Safety Net was created by the Banking Act of 1933, which is a legislative response to 9,000 plus banks that have failed during the Great Depression. Independent US government agencies backed by full faith and credit of the US government. So let me basically explain what it means to all of us. Every bank, before you start a bank, the CBN or the central bank has a minimum requirement in terms of money you go and keep at the central bank. So that in a case, like I gave an example, in a case where right now the bank says we are not making profit, central bank will not say that because you are not making profit, just collapse and leave the people stranded, like Sister Pretty Beauty was saying. Because they have money at the central bank, CBN will now give that money they saved at the bank, at the CBN, to their customers. Because else all banks will just wake up one morning and tell us that the money in the bank, they've gone bankrupt, so they are closing the bank. So all banks have a reserve they keep there, and the threshold keeps going up. It's a lot of money. So to start a bank is not easy. So if you see Mr. Tony Elumelu opening a bank, just know it takes a lot. So that's how they are being funded. So there's always a deposit safety net. Because if CBN doesn't do that, we will keep losing our money every day.
So CPN does that so that in the case where the bank goes bankrupt, they still have a reserve where they can use to pay their customers. So in America, that means, so I'm using America as a case study. That means every money the bank is operating with, there's something to cushion them. And there are records for all these monies. So you cannot wake up one morning as a bank and say you've gone bankrupt, so all your customers have lost their money. So how is it being funded? It is funded entirely by insurance premiums paid by member banks, not by the taxpayers. Premium rates are based on the bank risk profile. Riskier banks pay more premium. The Deposit Insurance Fund holds about $12 billion in reserves. That's a lot of money, $12 billion. And what it covers is it insures deposits up to $250,000 per depositor and per insured banks. So even the banks themselves, they insure your money that is there. So we don't see it because they don't pay with the taxpayers' money, but they insure our monies. And it covers both savings accounts, the money market account, and all our investments. However, it doesn't cover our stocks and our bonds and our mutual fund and cryptocurrency. Cryptocurrency is so technical such that it can fluctuate. One day, if you open your phone and Binance or BlockPay or blockchain, the app you use for your cryptocurrency, has left the app store, what will you do? Have you thought of it before? Because it can happen. Because it's not regulated by CBN. It's now that most countries are putting measures in place, because a lot of times when people want to travel, you are not allowed to travel with up to a certain amount of money. For instance, you are not allowed to travel with more than $10,000 in cash on a flight. It's not allowed. So if I want to travel with more than $10,000, all I'll do is I'll change that $10,000 into cryptocurrency and it will be on my phone. So whichever country I get there, I do a P2P and I make a withdrawal. Then also there are records for all these insurances. So let's quickly look at understanding the Federal Deposit Insurance Scheme. And I'm using a practical scenario here. So the first thing you should note is that the ownership category system is sophisticated. We have different categories. So I've put them in different categories here. What you should know is that the ownership category system is sophisticated and more misunderstood. Financial planners use it strategically. However, large depositors don't like that one. A lot of times they don't like that one. So what happens is they often spread their account across different ownerships categories and different banks to maximize coverage. So for example, when I ask what bank we save with, most of us have more than 2 bank accounts or 3 bank accounts. Why? Because we want to spread our coverage. And on our investment, there are different banks that have different interest rates. So we are also looking for the best interest rate so that our money will grow. Because we want our money to keep increasing. So the Security Investment Protection Corporation covers all broker failure and not market losses. Because there are global crises, like right now there's the Iran war. It might affect every country. It's not directly a war between Nigeria and Iran, but Iran, because of the Strait of Gaza that controls the money or the oil, it will have an effect on us. So let's look at the coverage. The first one is we have single ownership. Usually the amount involved is $250,000 and it could be one individual, one bank, and the insurance is about that amount. We also have a joint account where usually there are two owners. That requires about 250,000 per owner. So the two people will make up $500,000. Then we have retirement account where an additional 250,000 is added. Then we also have a potential coverage where one person can have up to $750,000. And these monies we are mentioning, people have them in their account. Believe you me, if you ask those in the financial institutions, they'll tell you people have a lot of money sitting idle in their account. That's why we have to work hard and work smart and always be innovative with what we do. Because if we are able to be innovative and create something, these monies are mentioned. Dangote has them in his account. So they are not far-fetched. Then we also have the bonds and stock market, which is not covered by the federal investment. And it's more risky because there's no insurance. Then we have insured institutions in the world, which are more than 45,000 insurance institutions. So what you should know is that there are international banking schemes. We all know. What that means is that there's been a time someone sent you money, if you are privileged to have a relative abroad. They've tried to send you money one way or the other, either from America, from wherever they are. And this is international money because the money crosses borders. And there are regulations to how these monies operate. A lot of people don't know because now there's a lot of fraud. I'm sure some of you have heard about Hash Puppy. You've heard about some of the fraudulent Azamen who exist. And how do they get these monies? Romance come with these white people. They talk to them online, cyber fraud, cyber crime. So now you realize that cybersecurity has come to play a very vital role. So let's look at international banking, how these monies cross the border, and why it matters for Nigeria and the rest of the world. Because if you're a business person and you are going to even have a website, you have to know all these things. How does money work? How will we be able to transfer money from one country to the other? And with this one, I'm not talking about transferring money from one state to the other. I'm talking about international transfer. Because international banking is the financial infrastructure for globalization. And it's important because how does a Nigeria importer pay a factory in China? Let me ask. If you're a Nigeria importer, maybe you sell wigs and you want to buy the wigs from maybe Temu, maybe Alibaba, or anywhere. Or where do you usually buy the wigs? Can the ladies tell us where do you usually buy your wigs? Can you share with us? The men want to know. Mother's Day is coming so that we'll buy for our mothers. Anyone to share with us? Or anyone can share. How do you think we'll be able to pay if you are in Nigeria? How will you pay a vendor in China?
Can I speak?
Yes, please, you can.
Okay, if you are
Please,
paying a vendor in
your name, please.
okay, Omo.
Omo. Okay, you can go ahead.
So if you are paying a vendor in China, is either in two ways. If the is either you do your exchange. For example, there are online exchange platform where you can be able to exchange to the general acceptable currency around the world when you're doing a purchase, which is dollar. Then you
Great.
can, let's use example like cheaper cash or gray. You can be able to combine your money to dollar and pay a vendor in China because the currency is generally acceptable around the world. Thank you.
Great, Omo has answered. I think Omo, you can take over the class. So Omo knows so much about international banking. and that's great. So, like almost said, the money we use in Nigeria might not be internationally accepted because in China they don't spend naira. They have their currency, the Chinese dollar. They have the RMB they use. So every country has the currency they use. However, when you see the yuan, for example, what the Chinese use, the Chinese yuan, some people call it dollar, it has its limitation. So if you want to buy something in China, you have to change that naira you have into an internationally accepted currency, such as the dollar, because the dollar is one of the most stable currencies. That's why America is so powerful. So you change that money to the naira to dollar and realize that it takes a lot. Omo, can you tell us the rate, the naira to dollar rate as of today, the exchange rate? Do you know? Can you find out? You can check it online.
Yes, I think it's 1,574.
1,574. That's a lot of money. So just
Yes.
imagine you're buying goods worth $2,000, $3,000. That means you're going to change so much naira into dollar before your China supplier receives the money and now sends the items. So looking at international banking and cross-border transaction is important. So it goes beyond just how organizations interact, but we're also looking at how personally it affects us, because some people even buy from Temu. Temu has come to stay. And I know sometimes they don't ship what you get, what I ordered for versus what I got. I know sometimes we see these things online when it comes to Temu and these online platforms. But what you should know is that even these online platforms, they are cross-border transactions, because you are buying from somebody you don't know in another country, and these items will be shipped either via sea or by air to you in Nigeria, in Lagos, in Port Harcourt, in Delta State. So we'll quickly introduce what international banking is. I'll quickly introduce it. And then, like I mentioned, at 12, we'll go for a 30 minutes break. And then we'll be back to take the final session. And then I'll take questions. So as the class has been going on, please make sure if you have any question at any point, you note it down. At the end of the class, I'll take all your questions. We'll ask all our questions when it comes to understanding money and financial institutions, how these financial institutions work. We've been on a trajectory on even how money came about, what money is, how money has evolved over the years, and where money is going to. So we are currently at international banking. And here I wrote financial services and transactions that cross borders are referred to international banking. So once money is leaving one country to another country, it is an international banking. So even if I send money to you through Pound Pay from Ghana to Nigeria, it's an international banking transaction because it left one country to another country. Note I didn't say state. So if you send somebody in Abuja money from Lagos, you've not done an international transaction. It's a local transaction. If you send somebody money in Lekki, it's a local transaction. But if you send someone in Nigeria money to Benin, that's an international transaction. So it's either in Africa, in a different continent, in America, however you call it. But note that it is a financial service and transaction that crosses national borders. And why is it important? Because it's enabling trade, it's enabling cross-border investment, it's enabling currency exchange, like almost said, and movement of capital between countries and financial systems. Omo mentioned it, that if you want to pay your supplier in China, you have to change that naira into dollar and now pay your Chinese supplier with dollar. That means when your Chinese supplier also receives the dollar, he is going to convert that dollar he or she has also received to their currency. So there's exchange rate going on. So at every point, the money is being exchanged. And why is it important as a country? Because of inflation, it's important that you do more export than import. So in a case where we keep doing a lot of currency exchange by importing, that means our currency as the naira will keep going up, which is not the best for us. And what again is the movement of capital between countries and financial systems. You realize that cost of labor in China, for example, is so low. A wig for the ladies, I heard a wig being sold in China for about, let's say, 20,000 naira, can be sold in Nigeria for about 500,000 naira. And that's a lot of money. Or a car, even cars, you realize that these days these EV cars are coming to stay. Why? Because they are less expensive and they don't consume fuel, so you charge them. So gradually people are shifting from the traditional way of doing things to a more convenient way. That is the importance of international banking. So international banks finance import and export, and without them, globally, there will be a lot of risk. Sometimes I want something in Nigeria or I want a phone, and I tell my friend in Nigeria, he'll tell me, okay, send me the money, I'll go to computer village, I'll buy the phone for you. So seamless. And they also enable currency exchange for every international transaction. So almost said it rightly, you convert the naira to dollars, to euros, to whatever currency. And also it also gives the government foreign exchange, because what you should know is that whenever you send money, whenever you do a transaction, the government takes a levy on it, whether you know it or not. I'm telling you today, that's how the government also gets money. So the government also generates revenue through an international banking transaction. And they must be regulated, because like I was saying, if they are not regulated, there will be a lot of fraudulent activities. Because just imagine paying someone in China, someone you've not seen before, you cannot even speak their language. The person can easily dupe you of your money. And believe you me, you don't even have the visa to travel from Lagos to go to China to go and find that person. Then now you want to go to a native doctor. No. So there are regulations regarding all these international transactions. Then also there are fintechs that have been set up to regulate all these transactions we do. So in America, for instance, there's Tap Tap Send. It's a fintech. It allows those in America to send money to Ghana. In Nigeria, there's Swift. So when you send money, for example, one of the ways they know that it's legal or it's an authorized transaction is they'll ask for a Swift code. So if someone sends you money, for example, without the Swift code, they'll know it's fraudulent, because the Swift code, you'll be given access after 3 days. And usually if it's a scam or it's fraudulent, after 3 days, they believe you would have noticed. You'd have noticed that, oh, some money has left my account, I didn't authorize it. So when they come back to ask the sender or the recipient that give me the Swift code from the sender, by then the sender would have noticed and won't provide that Swift code. So that money will be pending and will be sent to the central bank. Did you note that? So the bank doesn't keep fraudulent money. So sometimes someone passes away or someone dies and people are wondering, how will we get the money? You have to present the death certificate of that person to the bank and other documents before those monies are released. That's how it works. So there's a system, there's a regulation. So you cannot say someone died, so the money on their OPay are just going to take their phone and transfer. It doesn't work that way. Same with international transactions. So there's SWIFT, which is the Society of Worldwide Interbank Financial Telecommunications. So SWIFT is an international payment method across 11,000 banks and fintechs, and it works in more than 200 countries. So I mentioned what SWIFT is. It's Society of Worldwide Interbank Financial Telecommunications, and they have policies, they have regulations that regulate all the transactions that are done internationally. So all across the world, you can send money using SWIFT and the person will receive it. And some of the key players in our international banking policy frameworks are JP Morgan, which is in America. We have HSBC in UK. We have the Dutch Bank, that is in Germany. We have Standard Chartered Bank. We have Citibank. And all across our country, we have different banks that help us do international banking. And like I said, every financial institution has what they do. Credit union cannot do international transaction. So you cannot say we are in a credit union, like I gave an example. So if the whole class decides to start a credit union, we cannot say now we are going to use that money from the credit union to be doing international transaction. It's not going to work that way. There are institutions and organizations that have been set up by the government to allow these international trades. So international banking is invisible to most customers because a lot of times we are the front end, so we don't see what goes on at the bank. That's why in today's class, we are looking at the back end. We are looking at what actually goes on when I send money from Ghana or when money is taken from my account into Temu. But it is essential to every aspect of global commerce. When a Nigerian manufacturer, for example, orders machinery from Germany, at least it goes to 3 countries. Maybe it's a transit, so it just doesn't come directly. It goes to at least 3 different countries. And also, that means 3 different currencies will be exchanged. Because once it gets to the country, you have to declare whatever you are shipping and all those things. And also, there's a security measure, which is the SWIFT message. Then one of the strategic importance of SWIFT was to avoid fraud. And a lot of times, apart from fraud, there's also terrorism, which is very important. You realize that recently in Nigeria, there's been a lot of terrorist attack. And these terrorists are being funded by people who give them money, who pays them. There are people who fund all these terrorist attacks. So we have to regulate all these things, because if we don't do that, people will keep sending money to us without us knowing the source of these monies. So we are able to do all these things. So Nigeria's international banking links are critical for diaspora remittance. We all know what remittance is: sending money across a country. For diaspora remittance flow that supports millions of families. So a lot of times when people travel, they send money down to their families back in their countries, and it's for family support. So even sometimes when you're sending the money, they ask you the purpose for the money. Is it for business? Is it for family? Just so that they are able to declare the use of the money when it gets here. Because some people hide under disguise and say, oh, the money is for this, when it's not. And it causes a lot of havoc to these financial institutions. So this is basically what international banking is about. We've looked at what it means, what it constitutes of. At this point, we'll go for a break, Mercy, for a 30 minutes break, am I right? And then we'll have the last session. So please, if you have any question, please note them down. When we come back from the break, we'll continue. Thank you so much for your attention. Let's quickly go for a break. We'll be back by 12:30. Mr. Messi is not here.
Thank you, sir.
All
Thank you
right.
very much.
Well, we'll be back at 12:30 p.m. exactly. Thank you.
Good afternoon,
Good afternoon, everyone.
Good afternoon. Sir.
To continue from where we left off, we're having a very insightful conversation about understanding financial markets, and we're at international banking. I think a few people have dropped off the call, but let's reach out to them. If you have a friend you know is supposed to be here and it's not on, reach out to them, tell them it's even about to get more insightful. We have a few more slides to go, and then we'll be done for the day. But one thing is certain, this knowledge we are acquiring is very priceless. I always tell people that knowledge is so important. You might not see the immediate value of these things you are learning, but one day they will come of importance to you, and then you'll be able to recall all the classes you joined. So every time you have the opportunity to learn, make sure you take advantage of it. So real quick, we look at international markets. We've looked at import, export, all those things. So now we looked at this as well. So now we are at the global financial architecture, which is very important. We have some global bodies or global financial organizations that give monies to countries, that loan out monies. One of them is the International Monetary Fund. Another is the World Bank Group. So we'll look at them and what they do, because you realize sometimes they'll say Nigeria has gone to borrow $5 million from the IMF. Is it for free, or it comes as a rate, and who is the one supposed to pay? So all these things, we'll look at it. So IMF is also called, it's an abbreviation for the International Monetary Fund, which provides emergency financial assistance to countries with a balance of payment crisis, and it requires policy reforms. That is the austerity devaluation as conditions. What it means is that an individual cannot go to IMF for a loan. The loans IMF offers is to countries. Then we also have the World Bank groups, which provide long-term loans and grants for poverty reduction and development of schools, roads, and health systems. So, for instance, if we want to construct a road in Ibadan, the senator or the governor can say, we are going to borrow from the World Bank group for this particular project. And Nigeria has engaged both IMF and the World Bank Group for exchange rate guidance. So they also help us with structuring our financial institutions in our countries. Then we have BIS and Basel Accords. So BIS is for internationals, or BIS stands for Bank of International Settlement, and the headquarters is in Switzerland. That is the central bank of all central banks. Every country in the world needs a Federal Reserve in Switzerland, and it's regarded as the safest country with financial freedom. So that's where the Swiss bank is. So if you have a lot of money and you want somewhere to save, I highly recommend you open a Swiss account. That's just on the lighter note. So they usually host meetings of global central bank governors. They set international regulatory standards. So the first meeting was held in 1988. That's Basel I. That was the first international capital requirement for every country. Then Basel II in 2004 looked at the risk-sensitive approach. Then in 2010, we had Basel III. We looked at post-crisis strengthening. But one thing you should know is that when we had Basel III, so Basel is the conference for the Bank of International Settlement. So let's say a country goes to borrow and they are unable to pay. Basel, when we meet at the Basel, we look at how to restructure those debts. So maybe are we taking a government property? How the government go about their payments? And then they make recommendation. Then we also have SWIFT, which I mentioned is the International Financial Trading Group, which is important for global secure messaging network for interbanks, all the transactions you do when you send money across. Then we also have the FX market, which is the forex exchange market. And from my research, I found out that every day on the foreign exchange market, about $7.5 trillion is exchanged in forex trading. And I think that's a lot. So either people are buying in one currency or the other. Everything sums up to about 7.5 trillion daily. So that means every day people are buying, people are importing, people are doing transactions. Then Nigeria's dollar rate is also a key indicator, and CBN manages its balances against inflation and competitiveness. So what you should note from here is that institutions of global financial architecture were designed after the World War III to prevent economic nationalism that contributed to the Great Depression. Because after the World War, different countries were in crisis, and IMF came up with these policies to help us regulate them. So the Basel is one of such recommendations. Let's look at key cross-border banking activities. The first one is trade finance, which involves enabling global commerce. So we have letters of credit where the importer's bank guarantees payment to the exporter's bank once shipping documents are presented. This reduces risk for both parties. Documentation collection is done by the banks as intermediaries, collecting payment against shipping documents, essential for Nigerian export and import business. What this basically means is that, for example, Sister Mercy wants to buy something in China, but she doesn't have the money. She'll provide the documents to the bank and tell her that, okay, I'm importing these items to Nigeria. The bank should pay for it upon presenting the documents. And then when you sell them, because you gave the documents to the bank, the documents will be in the name of the bank. When you sell them, the bank will take a percentage or interest rate on it. Then we also have foreign exchange services, where we convert one currency to another for trade, investment, and remittances. Spot rates for immediate transactions and forex contracts look into future rates. That's what we call hedging. And the spread between the buy and sell rate of how banks earn on forex. So you realize that when you go to the black market, for example, the rate Abochi will give you and the rate in the bank, there are two different rates, and I believe we can all attest to that. Why? Because there are different exchange rate services. Then there's correspondent banking, where small domestic bank maintain nostro account at large international banks to facilitate cross-border payment, and a CBN member bank in Kano routes international wire transfer through its correspondent bank in London, which is very true. What this means is that, for example, UBA is in Nigeria, but there's UBA in London. So if you want to do a forex trade, instead of when you present the naira in Nigeria, instead of UBA to convert that naira to pounds to be used in London, UBA will tell the UBA branch in London that pay in pounds, then we'll keep the naira here. That way the naira becomes stronger. Do you understand? A good example is sometimes when someone is abroad, they send money to their families that build for us. So instead of them sending money, someone can withhold the money there and say, okay, I'll give you a CD equivalent here in Ghana. Hold on to the dollar or the pound for me. That's corresponding banking. Then we have the euro currency market and syndicate loan, which is not very familiar with us. But a euro dollar market is a dollar deposit held outside the United States, where a massive, lightly regulated offshore market and syndicate lending happens. Multiple banks joined with huge sums of money in their sovereign accounts come together. So, example, there's Nigeria's Eurobond, which allows distribution across multiple lenders for very large transactions. So these are a few key cross-border banking activities are included for our study. So let's look at international banking and Nigeria. International banking in Nigeria. The annual diaspora remittance of Nigeria is $20 billion. I'll take it again. Maybe you didn't hear. I said the annual diaspora remittances every year, the money that foreigners bring into Nigeria for all their transactions or everything they do is how much? $20 billion. And that's a lot of money. A lot. I dare say that's a lot of money. And Nigeria is amongst Africa's top remittance. So the money usually comes from UK, USA, Europe, larger than. So a lot of times people tend to say it's fraudulent money, but I don't want us to believe that it's genuine money. It's not fraudulent. Then also we have daily forex trading volume. Like I mentioned, forex trading has come to stay. And there's a global forex market that sets Nigeria against the dollar with the forex exchange. And the Fed rate changes directly against the capital flows, which affects all currencies. Because when it comes to forex trading, it's one currency being traded against the other. So you can trade the Nigerian naira against the Japanese yen, against the American dollar, against the British pound. Also, the World Bank has an active portfolio of $4 billion, and the World Bank's active project financing is in Nigeria. Wow. So the World Bank usually invests in Nigeria, usually in education, in power, in agriculture, in health and infrastructure. So like right now, Dangote has a refinery. You realize that the World Bank is not happy. Why? Because they won't get revenue. So I put here Basel III. That's the last conference being attended, which is a global capital standard. Nigeria banks regulated under CBN rules aligned with the Basel III, same as the framework being used in US and America. So Basel III is a globalized standard. So everywhere you go around the world, you realize that they have an anti-money laundering policy. They have an anti-terrorism policy. So you cannot pass terrorism money, or you cannot do criminal activities and want to pass the money through the financial system. That's why a lot of times people do money laundering. So they set up a club, and that money from terrorism, they just find a way to enter the financial system using that. Then we have e-Naira, which is also a new development, but it's Africa's first CBDC, which was launched by Nigeria in 2021, which is becoming Africa's first country to issue a central bank digital currency. Ghana is yet to introduce one. However, Nigeria already has one that is currently running. Then we have an annual Eurobond issuance of $2 billion, which Nigeria regularly accesses on international capital using the dollar-dominated bonds and global investments. So these things are important. These ones are usually on the national scale, so you might not be able to relate with all of them, but still keep note of these things. It helps broaden your scope and it helps you understand how financial markets work. Very quickly, let's look at trends in financial institutions as the last but one topic for today. And then we'll take questions. So under any topic, if you have any question, like I mentioned, please take note of the question. I'll take all your questions. So we've moved from the foundation of what is money and how money is managed through the institutions that handle money. Now we look at the entire system of what money is. And we've also looked at the trends. But one thing we didn't factor in is technology is not just how things are changing, but how now banking is being redefined. Are you aware that some ATMs can now do deposits? So you don't have to walk to the banking hall. You can just walk to an automated teller machine and the ATM can make a deposit. So gradually technology is evolving and we have to brace ourselves to be able to adapt these emerging technologies. So in our next series of teaching, we'll look at digital marketing, we'll look at fintechs, we'll look at AI, we'll look at regulation and the future of finance. Fintechs are different from banks. They serve similar roles, but they have different jurisdictions. So we'll look at all these. So let's start with the banking revolution. Banks have moved from physical branches to pocket-sized banks. Now there's a new bank. So even on your phone, you have the Access Bank app, you have the Fidelity Bank app, and you can access your bank from the comfort of your home because things have changed. So initially, before you could make a deposit, you have to walk to the banking hall. I mentioned now you can do a deposit with the ATM machine. You can do a deposit from your phone. You don't have to go to the banking hall. So let's look at how the banking system has evolved, and I'll tailor make it to Nigeria as well. So let's start. Digital banking. All banking services, deposits, transfers, loans, investments delivered through smartphones, tablets, and computers where no branch is required is called digital banking. I often say digital banking is any form of banking that requires internet because your smartphone has internet. Your grandma or your parents in the village don't have access to internet, so they don't have access to digital marketing, or I mean to digital banking, sorry. Then we also have neobanks, which is an online bank only. Now, will you believe things have evolved so much that some banks don't even have physical presence? They are strictly online. In Ghana and Nigeria, it's not common, but in the western part of the world, there are banks that don't have a physical branch. So you transact online, you text them online, you call them online without a physical branch, and these banks are fully operational. So they operate with 0 physical branches. That means that their employees all work remotely. Because whilst researching about this topic, I was asking myself, if they don't have a physical branch, how do they work? Because they'll still need staff. And then I found out that they all work remotely. You know, after COVID, most organizations have adapted to remote work. So some organizations, you go to work twice a week, 3 times a week, or maybe 2 times a week, or once a week. For neobanks, they work full-time remotely. And one thing you notice that it lowers the cost because you are not going to rent a building, you are not going to pay for utility, you are not going to pay for light, water, all those things. Those expenses are cut short. And savings are passed to customers with better rates. So across the world, there's one called Revolut, and you can all look at it. And as these things are emerging in the Western world, let's look at how to also embrace it. Let me find out. Omo is not here. But if you are presented with an opportunity to save with a bank that has no physical presence, I would like to know, will you still save with them? Pretty beauty. If there's a bank without any office, do you think you trust them enough to save with them?
Not at all.
Not at all. Even those with physical branches, we are not having it easy. How much more those with no physical branch? But you see, it's emerging. Was anyone saying something?
Yeah, I was trying to say something. Good afternoon, sir.
Good afternoon.
Yeah, maybe before and now, I used to know that OPay do not have branches in almost across the country. So and we were using their services. Not until recently they started maybe a little branch in each of the states. They are still in the process. So, but prior to this time, they were not having branches, and we were attending to them, and their services were fast in terms of deposit, withdrawal, and transfer.
I agree,
Thank you, sir.
absolutely. So much, Mr. Rick. Very good input. So, like he gave an example, OPay did not have a physical branch until recently when CBN required that they at least have a branch in every state, but we're still using their services. So, it's gradually creeping in. gradually you realize that we'll have to embrace it, because one thing you should notice that some of these banks use facilities where they pay so much for them. A banking hall, paying these staff coming to work every day, you have to pay for utility, for all these things. But without the branches, it's seamless and they're able to attend to us. Once you meet the requirements from CBN, it's functional. So let's also look at Nigeria's digital banking leaders. So we have Kuda Bank. It has 6 million plus customers, which has zero fees and no branches. Like Mr. Rick said, Opay just started having physical branches. Alert by Wema Bank, which is Nigeria's first fully digital bank. Opay, like Mr. Rick also said, has 35 million users. We have PoundPay, we have money points for even SMEs. So gradually you can see that this digital banking revolution, it has come to stay. Mobile money explosion has also become a thing, because Nigeria saw a 50% surge in digital banking adoption during COVID-19. Because during the pandemic, we're all in lockdown, we couldn't go to the banking hall, but we still needed money to eat. We still needed money. I remember so well, people started selling nose masks and face shields. And one of the businesses that became lucrative within those times was delivery business, because you couldn't go out. So the best thing you can do is give it to a dispatch rider. So mobile money also increased. Whereas we have our traditional banks such as GT Bank, Zenith Bank, Access Bank, are even investing in digital transformation. As I speak, every bank has an application in the App Store or in the Play Store. Why? Because they cannot keep insisting that come to the banking hall. Some you have USSD code. So even if you don't have a smartphone, you can dial star 805 star something, and then you still have access to your money. Are you seeing it? So even with the traditional banks, they are also redesigning their apps. They are adding more APIs. Because in as much as the branches have advantages, not everyone would want to work in the branch. One thing I've come to notice is that people like convenience. So if the bank can come to them, they are fine. That's why Opay is doing well. Because right from wherever you are, you can do a transfer, you can make a deposit, and it's seamless. So financial inclusion dividends is so important. Digital banking has brought millions of previously unbanked Nigerians into formal financial system, and the smartphone has become the new bank branch. Did you hear that? Your smartphone has become a new bank branch. When someone takes someone's phone, the first thing they're doing is they want to block their ATM, and they're going to request that their app be disabled, because on your bank, on your phone, you can do everything. You can withdraw, you can deposit. Now you can even take loans with your app. With the bank app, you can request for a loan. So the nearest bank branch now is your phone. So digital banking is not just a technological upgrade, it's a structural shift in the economics of banking. And traditional bank carried enormous fixed costs in branch networks, such as the structures paying even security. I put here paying security. It's also a cost, because if you have a physical branch, you need a security to guard it. You need bullion cars or bullion trucks to go and bring the money. So a branch-based bank needs about 100,000 per customers per branch to be profitable. Whereas a neobank, so a neobank is the one I spoke about with online presence, you don't even need a branch. So the cost is low. So digital banking has evolved. Now let's look at fintech. It's similar to what a bank does, but a fintech is not a bank. And that's why you're in today's class, so that you know the difference between a bank and a fintech. After this class, when anyone engages you and they tell you that, or they ask you what's a fintech, you should be able to define it. So I put here, a fintech is a financial technology company that uses software, data, and algorithm to deliver financial services more cheaper, faster, and with better user experience than a traditional bank. Let me take it again. A fintech is a financial technology company that uses software, data, and algorithm to deliver financial services more cheaper, faster, and with better user experience than the traditional bank. And you should know that the fintech is not a product, it's a method. So some banks have fintechs included in their services. So for example, we have P2P lending and we have a marketplace finance. So quickly, I'll go through what it means. We have lending clubs in America, such as Carbon, Fair Money, Rent Money, which is in Nigeria, which are all P2P lending. So you want to borrow money, you can download a loan borrowing or a loan service provider app on your phone. You didn't have to go to any bank. So they'll just make sure all your details you filled are correct. And they'll always tell you allow access to your camera and your contact. And trust me, they can frustrate you. If you don't pay the loan, they are going to send messages to all your contacts. And you see, a lot of people don't notice some of these things. So once they sign up to the app, they are just looking for the money. So they just approve everything or agree to anything. Most of these loan apps have access to your pictures. So even your pictures on your phone, they have access to it and your contacts. I've had issues where people went for loans and now they were harassing their contacts just to compel them to pay. Then we have fintechs for payment and money transfer. So in Nigeria and Africa, we have Paystack. So usually when you go to a website to make any online payment, Paystack is used. We also have Flutterwave, which is more common in Nigeria, which is powering millions of online transactions. We have Stripe, which was acquired Paystack for $200 million. So we have other remittance apps such as Chipper Cash and SendWave. And we also have Western Union. Gradually, I think Western Union is becoming obsolete. It's becoming old. People don't use Western Union again. But before Chipper Cash, there was Western Union, where you have to go to the bank with a code. Now people don't do that again. Fintechs have also revolved, and we have buy now, pay later embedded in our financial market. So we have Klarna and Affirm, which offer instant credit at point of sale and credit embedded into e-commerce checkout. Growing in Nigeria through CredPal and CDK, reshaping customer credit fundamentally. So now there are even fintechs that are responsible for buy now, pay later. So you want to buy a laptop or you want to buy a phone, you can use CredPal. So you set up your account, you have your credit score, and you buy. So CredPal is essentially paying for the device and then you pay back later. We also have InsurTech and robo-advisors and regulators, which are offering AI-powered insurance pricing. So there's an example, it's called Lemonade. I recommend we all look into it. Lemonade is an automated profile management system that ensures compliance automation for banks. And it's good because sometimes you want to file your taxes, you want to pay your taxes, but some people tend to forget. But with some of these apps, immediately the month ends, it pays the taxes into the right account, even for payment of employees and salaries. We have fintechs that have employed all these tools to make life convenient. So fintech is not just a single thing. I always tell people that it's a toolkit that applies to every corner of financial services. And the key insight is that banks were profitable partly because of information asymmetry. But now, information is everywhere. So we have to learn to do things differently. So now let's look at AI. AI. You see, this class is very relatable. So we are just not teaching what you could have read online. These are practical things in our evolving world because AI has come to stay. ChatGPT has come to stay. Gemini has come to stay. Grok has come to stay. DeepSeek is here with us. And AI is here to make our work smarter. So what would have taken 30 minutes to do with AI, you can use 5 minutes. So now you can even work more and become more productive. So let's look at artificial intelligence, which is also transforming our financial services. The first place artificial intelligence is transforming our financial services is in credit score and lending. Traditional FICO scores use 20 data points. And these models analyze thousands of variables: your payment history, the device you are using to borrow the money, your behavior, your social patterns, your utility bill. Artificial intelligence is able to gather all this information from your phone, and it results in credit extended to a thin file borrowers previously rejected by banks, because there are some people, they cannot go for loans from banks because they owe or they defaulted at one point or the other. However, with these credit scores by these fintechs, you can take even lesser amount. For instance, if you need, let's say, 5,000 naira to do something urgently, it will be hard for you to go to Zenith Bank that you just need 5,000, but you can just with the fintech or with these savings and loans apps be able to borrow small amounts and they will give it to you. So lenders also process things easily. Previously, before you go for a loan, they'll ask for a collateral, they'll have to do background check to check the ownership. But now they are even collateral free loans. You can borrow money without a collateral. And that should tell you how things have changed over the years. There's also risk associated to this. However, the risk algorithm is trained on your historical data. So a lot of times when it comes to these lending apps, you realize that if you default or you fail to pay early, the amount they give you reduces. Why? Because they've integrated all these systems. So you are able to mitigate risk. As well, there's fraud detection, which is very important. Because of implementation of AI in our financial systems, we can now detect fraud and security. We can put in security measures. For instance, if you see a credit alert and it's not from your bank, you can quickly report. AI systems analyze millions of transactions in real time, and they are able to flag and anomalize in real milliseconds the ones which are human, because machine learning detects fraud patterns invisible to rule-based systems. So it helps even the financial institutions save money, because they would have lost money as a result of fraud. So AI is not bad. And one thing you should know is that these fraudsters have also learned to use AI. So now the AI can change their voice. So the account is for Mr. Rick, but there's an AI where the voice can be changed to sound exactly like Mr. Rick. And so in as much as it can be detrimental, we also have to put in these systems. And one of my favorite advantages of AI in our financial institution is the chat box and virtual assistants. Now, almost every bank has it. Once you go on the bank website or in the bank app, you can chat with a chat box or a virtual assistant in real time. They'll reply you and give you the right information. And the beautiful thing is some are giving names. So you can go and the chat box is called Chuku or Emeka. And it's very nice. So they make it very relatable. And now we are learned to embrace all these things. We also have algorithm trading. I've heard forex trading has evolved so much that there are AIs and there are apps that you just have to do the deposit, and artificial intelligence will be trading for you. And you have your returns because they are able to speculate and anticipate the market. Then we have personalization, where artificial intelligence is able to analyze your spending patterns and even make recommendations on how to save and your spending pattern. There's also back office automations, which we'll look at later. So AI is the most disruptive technology in banking currently, and it does not just automate existing processes, it enables entirely new business models. Credit scoring revolution is particularly important for developing economies by using alternative data. AI can extend formal credit to millions of Nigerians who have no traditional credit history, because sometimes some people don't even want to go to the bank because they are afraid that when they go for the loan, their name will be in the system. But now financial institutions have resolved so much that even those who could not go can now access these financial facilities from the comfort of their home. And the ethical dimension is a live regulation debate. So AI is not bad. AI is here to enhance our work. And as well, please go to the chat section. There's a feedback form for today's class. Tell us how to improve our classes. Tell us what you liked about our class today. Share with us your feedback. It helps us to make these classes better, to help improve on the delivery from our teachers, to help improve on the information we give to you. So your feedback is very much needed. So please copy the link even whilst we are in this class. Make sure you give us feedback. Make sure you give us feedback. It's so important. And if you were not here before, today we are taking understanding money and the financial institution. So we've been on the series from topic to topic, understanding what money is. And like I said, money is a very important topic. It's talked about everywhere. The reason why we work, the reason why we go to school is money. So let's all take this topic serious and make it a point to also learn and acquire knowledge. So now, what typically we call Gen Zs. Now in our world today, there's something called Gen Zs where we talk about the younger generation. With their generation, they came to meet cryptocurrency. And now we want to see how the central bank digital currencies work, because cryptocurrencies have become a thing. By the day, people are selling BTC, people are selling Ethereum. There are different cryptocurrencies. And don't say, oh, I don't use cryptocurrency, I do transfer, so it doesn't matter. It matters. It will get to a time we might all have to move to cryptocurrency. And so now even the central bank is trying to regulate all these cryptocurrencies, because with the cryptocurrency, one of the reasons why a lot of people like it is you cannot trace the sender of the money. So if I send Humphrey money right now, Humphrey would not be able to tell where the money came from. So a lot of illegal activities go on in the black market, and the form of payment is cryptocurrency, especially with Telegram. With recent development, I've noticed that a lot of fraudulent transactions go on Telegram, which is a good social media app. But once you do any transaction, the person asks for cryptocurrency, you should be a bit skeptical, because like I said, the money cannot be traced. So these are some of the policies the central bank has put in place to help us curb these problems. So I'll give a brief history about Bitcoin, which was first introduced in 2009. It is first a decentralized currency designed explicitly to operate without banks or governments. So in 2009, they wanted money that wasn't printed by any bank, that wasn't being regulated. That's why cryptocurrency or Bitcoin was introduced. Then there's something called a blockchain, which is a distributed ledger that records all transactions transparently and immutably across thousands of computers. So blockchain keeps the records of these accounts. So unlike having a physical bank where we can see all these records, when it comes to cryptocurrency, they are all kept on a blockchain. And these blockchain accounts do not require a bank account. It is a borderless, seamless, instant global transfer, censorship resistant. So even when it comes to Bitcoin, they don't factor in the age. So you can be talking to a minor, maybe a girl who is 8 years or 10 years, and these men want to enter into slave trade or whatever, human trafficking. Then they send them Bitcoin and then they traffic them. All these things cannot be regulated. So we don't encourage it. That's why the central bank had to put in measures. However, Bitcoin is extremely volatile because it's not regulated. You can wake up one morning and like I said, the application itself won't be functional because it's being regulated by one person. And there's so much monopoly because it's being controlled by one person. So the price is volatile. At one point, Bitcoin is $120,000. At another point, it favors the owner. So there had to be a decentralized finance for all these things to streamline the borrowing, lending, and earning interest on this blockchain without banks. And also, we had to look for consumer protection laws. I'll give a good example using Nigeria context. Nigerians are among the world's highest per capita cryptocurrency users, partly as a dollar hedge against naira depreciation. I put this here because I noticed that in Nigeria, a lot of people will not want to save naira in their account because they feel like the naira will lose its value. The naira will depreciate. So rather than keeping naira, they'll rather keep it in a stable currency such as the dollar on their cryptocurrency because they know that that money will forever be stable. Then let's look at CBDCs, which refers to the central bank digital currencies. Now, some central banks have actually introduced their own cryptocurrencies. And it's important we embrace them because government introduces this digital money on a blockchain as a distributed ledger. But this time around, unlike blockchain, which is not regulated, this one is being regulated by the central bank. And Nigeria, for example, in October 2001, introduced the e-naira. I know it's not too common, but it's there. That was the first African central bank digital currency to be introduced. And you can access it. I want to find out how many of you know about the e-naira. If you know about the e-naira, you can kindly indicate there's a way to react. Do you know about the e-naira? Have
Yes,
you? Oh. Okay,
I have
Mr.
an
Rick,
account.
share with us what you know about it. Just a few
Yeah, I
brief.
have an account. When it was launched in 2021,
Yes.
I opened an account on that platform. It's just that, just like you said, it is not thriving, or the government policy is not making it to be a gateway for payment, especially rather than using a dollar in most cases. So it's still evolving. Let's hope that uh, subsequent government, not like the one we have today, would look at ways to improve on making sure that that e-naira or platform is actually a means of a gateway for exchange of goods and services. Yes, that's the much I can say about that. Thank you.
Excellent, excellent delivery. Very excellent by Mr. Rick. So e-naira is there. It's just that it's evolving. So let's give it some time. Hopefully the next government, like we can all tell, not this government, definitely. But there's no political class, so we'll leave that for another day's topic. Countries such as China, Japan, in the Western countries, the central banks have their own cryptocurrencies, and it helps because those ones can be regulated. Unlike Bitcoin, which has no regulator. So today, if Bitcoin decides that their app is no longer functioning, that means whoever is saving on Bitcoin, your money is lost, and you can't ask anybody for your money. No one is accountable for it anymore. So by the day, you realize that the central bank is trying to protect us, is trying to protect their consumers. There are risks involved in these things, but you should note that these risks can be controlled when there's a central regulatory body to control all these things. So quickly, now let's look at the regulatory evolution. These things are important. I know not everyone here works in a financial institution, so some of this information might not directly relate to you, but you should know who regulates your money so that when they are reading policies, you know how they affect you. It's not enough to just keep your money in the bank. You should know the ATM rate because every month, just by keeping your money in the bank, do you know the money reduces? It actually does because there's a service charge. You've given your money to the bank to keep to you. They actually debit you every month. So you have to understand these regulatory policies. So the first one is the post 2008 policy from America. So it was created by the Consumer Financial Protection Bureau, which mandated all banks to have restricted proprietary trading and also increased capital requirements for systematical improvements in the banks. So the first thing they noticed is that banks were just collapsing. And when the banks collapse, the customers or consumers of the bank, they end up losing their money. So in that meeting, they said, okay, we are tightening regulatory policy. Every bank, you keep this amount of money in the central bank so that when your bank even collapses, we have money to offset your customers, because you cannot say just by virtue of your bank collapsing, your customers will also have to lose their money. No. Then we have the Basel III, like I mentioned, it was a global capital standard. Then we have open banking that talked about competitive revolution, where regulation requiring banks to share customer financial data with third parties. So you realize that some people were having their pins and their passwords hacked. So now the bank had to tighten all these things, that okay, no one should have access. Now the bank started introducing OTPs. That's one-time password. So now you want to access your bank account, they'll send a one-time password so that hackers and all those malicious activities cannot take place with your account. Then we have regulatory sandboxes from the Security Exchange Commission and all these financial bodies to reduce financial barriers. So all these things have come to help us. Open banking is arguably the most transformative regulatory development in banking. So you can walk into a bank, open an account yourself. Even now, you can open an account from your phone. And Nigeria's framework is newer, but is growing rapidly. The long-term vision is to create a banking ecosystem where customers control their own financial data and can switch provided instantly, which means we are fundamentally shifting power from the banks to the consumers. So now by the day, we are becoming more powerful. However, there's a threat we also have to look at, which is very important, which is cybersecurity. Because as we evolve, you should know that the hackers, the scammers, the spammers, they're also increasing. So there's that threat in this digital space, which must be looked at. By the day, the central bank records so many fraudulent activities. Sometimes you use your ATM card at a bank or at a hotel, or to even buy something, and the next thing you see, someone has the CVV and they are debiting your account. How did they get this information? You should know that financial institutions, and always remember this, are the #1 target for cyber criminals worldwide, because they know you have money. So you realize that banks, fintech, they invest so much in cyber security. Now there's even a CISO who is just in charge of information security. And there's a CITO, which is in charge of information technology. And there's someone in charge of cyber security. So now there are so many roles just to curb the problem of cyber security. Because whether we like it or not, IMF estimates cyber attacks cost the banks globally $12 billion. The monies these banks lose, $12 billion all across the world. And I think that's a lot of money every year. Just imagine who those funds were going to. So some of these types of attacks, when it comes to our cyber security, include phishing. Phishing is social engineering. So they take money from you, they fish out the money from your account, and then they bombard you with so many emails. There's also ransomware, where they data kidnap your information. So they take your password, they take your logins, and they hack it. Sometimes they even hack your email to get or access to all this information. Then there's SQL injection, there's Swift network fraud, where someone is sending you money, then the funds are being diverted to another account. There's even insider threat, where the people who work in these banks, so who even take it out, some of these workers in these banks steal our information and give it to people. So when we look at all these things, let's look at a situation of Bangladesh where there was a swift money heist. So in Bangladesh, some people stole money and then they diverted the money into a different account. I would like to find out here, has anyone faced a cybersecurity attack and what was your experience? Anyone at all? You share your cybersecurity. I want practical real life experiences. Anyone here to share their experience with us? There was cyber.
Okay. Sorry, say again.
So I was saying, can we share any experience with cyber attack? Maybe your account has been hacked before, or someone tried to defraud you online.
I think thank you, sir, for this opportunity. One that came to mind, as technology begins to evolve and knowledge, I'm very much happy with the information you're providing on this platform, which is really helping us to be able to know how to deal with financial matters. My experience, actually, one that comes to mind is when I was applying for a visa
Okay.
on to a particular country. So I had to just go on Google. We hadn't what we call AI, sorry, AI is that time. So I just Google was the thing. Just
Okay.
anything, just Google, ask Google. That's what we've been told. So I asked Google, a link just pop up. I wasn't very curious about it. I just went in, then just the same information that was required of me. Of course, I do know what was required when you are applying for visa. And the internet, it was actually a fishy, that's the best way to describe it. It was actually a fishy website,
They
you know.
duplicated
So
our websites and
yeah.
okay, so please continue. We are
So
listening.
I wasn't very curious like as I am right now because of how much transformation college have done to me as a person. And so I fill out my information, put in my credit card, they remove the money, and then they say, okay, you got that notification that your visa is being processed. That was just in. After a while, it shouldn't take more than 48 hours. Uh, 72 hours came past and nothing was 1 week. Oh, these were still in process. I got curious and then I started going back to the trail the conversation. I started checking the website. I said, oh, something is missing here. This guy's
Wow.
got me.
Already
So
taking the money.
yeah, of course they took $50 from me. And then I had to go back again to the main. I
Well,
checked and then I saw the real website. I went there, made my payment, and then I got my visa. So
that's
but of
great.
course, never again. I tell you,
Never.
never. With what I have now, with what
Direct.
Transformation College have done, you can hardly I can criticize any interrogate any document, not just only images, website. I know what to look for on the website, what authenticate website. I know what with the knowledge of AI that we have been on our other platform of uh, artificial intelligence business analyst, and several other trainings that we have gone through. And I'm happy again that in this journey, just to say this in a way of appreciation, that pretty pretty what? She's still on the course. We're still running the same race. I'm happy that she's still here and we're all pushing together. We're improving ourselves and never again with anybody. I mean, when I mean anybody on whether on cryptocurrency, I know what to look for on on uh, on um, on the blockchain concept. I'm going to ask some questions when you get to question and answer on that. But I'm very much thankful for this. Thank you, sir.
Thank you so much, Mr. Red, for your input. So I think we've all had one experience or the other, and now as knowledge evolves, we also get to know how to manage these situations. so that we don't fall victim another time. So there's also financial inclusion. With all what we've said, there are still people who don't know banking has evolved. There are people who don't know or don't even have bank accounts, who don't have mobile money. Like there are people who are unbanked. And whether we like it or not, there are people in rural areas and in some part of the sub-Saharan region who don't have access to all the information we have. But it's important to include them because one way or the other, they still use money. So how are they going to save safely? How are they going to access credit facility? How are they even going to be paid salaries if they don't have access to all this information? But you can see gradually we keep including them. So now there are rural banks for those in the rural areas, and their operations are streamlined for those in the rural communities. So financial inclusion is where development of economy meets business strategy. So as a bank, you cannot say you only want to meet those in Lagos and Abuja and Port Harcourt and Lekki. You have to consider every other state. Those in Ogun, those in very deplorable states must still be considered. And you also have to look at how to include technology for some of these people so that they are all included in the banking system. So now what's the future? Because we've looked at the past, we've looked at the present. Now we also have to look at the future. What is the future looking like for us? The future of financial institutions has become very certain. Previously, we couldn't predict the future. But now we can because there's structural transformation. So now banks have accelerated, they've become larger, they've become digital, and there's face to face. So now we are switching from the traditional banking method of just going to the banking hall, of merging the two. So there will be a time where branch network will not be just going to the bank. Now from our phones, from our TVs, now there are smart TVs where you can even download your banking apps on them. There are smart fridges. So the world is going smart. So we'll have to have a way where the CBDCs maintain a streamlined operation for both digital currencies. AI has primarily come to also help us. But with this chat box, we have to feed them with the right information. And with all of us on this call, be very careful with what you upload on AI. What a lot of people don't know is that AI is also someone's organization. I'll share a quick story before we close. There's an organization in London that has sued PwC, which is one of the biggest auditing firms, because they did the audit, they found out the information, and they ran it by AI, not because they wanted to feed AI with the information, but because they were just doing a test run. Now AI gives out this information that is supposed to be confidential to the general public because AI is the information we feed it. So, for instance, if Mr. Ray goes and says, Transformation College, he has learned so much, it's been a blessing to him, he has acquired so much knowledge. If I also go and ask AI, do you know Transformation College? Transformation College or AI is going to give me information based off of what Mr. Rick has fed it. Then there's also quantum computer threat. And we have to look at all those things where there's Web3 and DeFi, which also talks about how cryptocurrency are being smuggled. One of the things you can see is gradually these banks and financial institutions are including ESG in your banking. So now banks don't just look at your profitability, they look at your contribution to the environmental, the social, and your governance, which is important. So now banks contribute to corporate social responsibility. You realize that banks are constructing roads, they are developing schools. Why? Because beyond the financial part of what the banks do, we are looking at their contribution to the society. We're also looking at carbon footprint emission. All these things are important and play a very vital role in what the future of financial institutions look like. So in today's class, we've learned so much. It's been very insightful for me. Even though I'm the facilitator, I'm also learning. I prepared these slides, I went through, but I'm also learning because some of this information just come to remind us of some of the things we know and some of the things we don't know. So this summary has consolidated everything we've learned in today's class. We looked at what money is. We looked at the characteristics of money. We looked at the three main functions of money. We looked at what money is, how money has evolved from them using silver to us now using a digital money transfer system. We've also looked at the Federal Reserves. We've looked at the financial institutions in America. We've looked at the US deposit mechanisms. We looked at international banking. And we've looked at trends in finance. So this class has been insightful and it's been very sequential. So a few key take notes I put down here is money is a social contract. Its entire value rests on collective trust in institutions. When that trust breaks, the economic consequences are catastrophic. Then we look at the Federal Reserve's decision they take, which has an effect on us. Then we look at different financial institutions which serve different needs and different people at different times. Then there's also the deposit insurance, which is a masterwork of public policy. There's also international banking infrastructure, which we cannot sideline because every Nigeria import or export or remittance is as a result of international banking. Then there's technology, which is not just here to evolve, but it's also here to change our banking structures. So you realize from here that money and trust, does Bitcoin satisfy all the functions of money? You also look at evaluating the Federal Reserves. You look at how small business owners can have access to credit facility. Then we've also looked at the future of banking. We looked at the e-Naira example and how we are all going to adapt to them. And then we look at some specific interventions we think the banks can introduce to make it accessible to all. Also, soon we've come to the end of today's class. A very insightful training and teaching for all of us. So at this point, I'd like to take questions and then we'll close. As well, if you've not filled your attendance form, please make sure you do well to fill your attendance form. That's the only way we have account of those who joined today's class. And as well, please do well to fill the feedback form for us. We do not take it lightly at all. We take your input for our classes and we improve on them. So please, anyone with any question, Mr. Rick, you said you had a question. Any other person with a question, you can kindly unmute and ask or put it in the chat box if you are not in a position to unmute.
All right. Thank you very much, sir. I'd like to make I'd like to start by saying thank you very much for this is very extensive, not just really insightful, but very extensive. And I hope that we will find time to go through it over and over again because these are our daily occurrences. These are things that happen on the
Day-to-day
national,
activity. Yeah.
the global stage. So my first question would be, okay, before then, I'd like to make a remark.
Okay.
When you started, you talked about what is money? What is money? So you called my name and requesting to know what my definition was. At that point, I was on a transit just to make sure that I get to my place on time. I had to switch from the regular means of transportation to a more faster one so that I could
Wow.
get home on time. So I had the question, but I couldn't say anything. So it doesn't look as though, oh, maybe we are not participating in sort of, but I
Sorry
just thought
about yeah, see.
I just thought I should say something about that. Yeah. Then the question that I have would be number one, talking about financial inclusion.
Yes.
And all of us here are on this platform, I would presume, are entrepreneurs and business managers or consultants, as the case may be. How do we translate though, just like you said, the process is still ongoing in all these policies to ensure that the remote areas are included in these financial processes that is going on globally. But as businessmen, as businesswomen, we know that the money is not only in the city, they are also in the rural areas. So um, how do we take advantage of, or what method or means should we improve in our services to also get those incomes from those rural areas? Because like you said, if the banks didn't take the rural banks to those people, they won't get the money they're getting. If the banks didn't improve on various assets to see how they put in the rural areas in their services in terms of using USSD code for them to get access to funds for those people in the rural area to get. How do we, as I don't know, I'm saying something. What I'm trying to say, sir, is using the case study of the banking system, how they penetrated the local or the rural areas. How do we, as businessmen or entrepreneurs, take advantage of that using the case study I just gave? I don't know whether the question is understood, sir.
So, it's a very practical question, but I don't have your business model, so I cannot answer tailor-made to your business, but I'll give a generic answer I believe is going to help everyone on the call. So the
Exactly.
first, you should notice that things are evolving. So previously, maybe your business, you didn't let me give a good example. When I started my business, I didn't have a website. I thought it was a family and friends. So my family members will see it on my status and they will buy and all those things. Then I realized that things are evolving. So now I opened social media account so that those who don't even know me still have access to whatever service or whatever product I'm selling. Then I realized that, oh, they need be for a website, because if someone is not in Nigeria and they still want my services, how are they going to contact me? That means I'll need a website. So you look at the business you produce or the service you offer, and you look at the business models. Then you look at, because we are talking about money, you look at the financial methods you can adapt to make payments easy. So maybe, for instance, there are some shops you go to, they'll say cash and carry. But you realize that, oh, these people do not have cash. Maybe they are farmers. They go to the market. So Wednesday is the market day. So you can say buy now, pay Monday. So what are you doing? You're embracing those people, because until they go to the market, they don't have the money to pay you. So if you bring your product or your goods and services on Friday, they don't have access to funds till they've sold their market produce. Then you also look at partnership with some of these financial institutions. It will amaze you that some of these banks want us to partner with them. They actually do. So you can go to OPay and tell them that, okay, OPay, this and this and this, I realize that you are not in, or you are now adapting. I want to offer franchise where we'll have retailers to offer these and these services. You give them a good proposal, you pitch it to them, because I dare say that there's more money in the informal sector than the formal sector. It's an argument. I'm still getting my data on it. But I believe that more money goes on in the informal sector. If you look at the money that goes on through our markets, it will amaze you. Millions and billions of naira every day. So that's very important. Then you also have to do some form of education. So you educate those you are reaching out to, and you have to train your staff or your business people, those you work with, because you have to educate them and tell them that, okay, so there's no internet, but we use a USSD. So your business, you can have a USSD short code where people will use for payment. Why? Because you want to reach out to more people, so that the person without a smartphone can still patronize your business. So no matter what we say, I was teaching a marketing class and I was telling them that we cannot relegate traditional marketing to the background. Till today, people still watch TV, people still listen to radio. So if you say you're only going to advertise with social media, that means you're going to leave the person in the rural village who doesn't have access to internet. So we have to adapt all these things. And I've mentioned a couple of them. So you look at your business model and see how best you can be able to fit these things to be able to reach out to those in these traditional areas to get them on board. So perhaps if you want to open an account for them, instead of you telling them to walk to the banking hall, you can say, okay, I'm going to them in the village this day and I'm going to do an activation for them, such that they didn't have to come to you, went to them. So you can employ some of these models to help improve your business, Mr. Rick. Please have your
All right.
question be answered.
Thank you very much. Thank you so very much. Then, just like you said, I did that on purpose to get a generic question that everybody can benefit from. However, I have a specific one. This one is me.
Okay, please,
I
you
don't
can
know
go.
if I can go. I'll tell you what I do or what I'm planning to do.
If it's not too
And
special, you can share with us.
yes, all right. Okay, firstly, I work with uh, artisan. Those are the local miners, sorry, local artisan people who are into, you can just mention a few, just like a welder, for example, a furniture upholstery maker, and so on and so forth. So,
Yeah.
and these are the kind of people I deal with. I try to train them to see how they can make their business visible using technology. For example, you can see somebody who is a furniture man that stays on your street and probably
Yeah.
would have spent about 10, 20, 25 years on that street, and only the people on that street knows him. So we're
Okay.
saying that you can upscale your visibility by us going through our training and showing how the internet or the social media, how you can use the social media to also kind of increase your visibility. Somebody can know in Ghana where you are, in Nigeria where you are, or in Uganda where I am. You can use, people will get to know you, that this is what you do, even without you being there. Somebody can be in Nigeria who is in US, knows that, oh, this guy does good furnishing, finishing, very powerful. I don't need to import those things. I could, you know, get his service done here, because of course you may want to think about the cost of importing all those things. If I have somebody in Nigeria who can do that for me, it will cost a lot of things. So we try to do this, and then we also moving forward to try to have a platform where these people can be able to host their services. Of course, they will be verified, have gone through all the compliances. And yeah, that is where we are right now. But you see, the challenge that we have is that a lot of them are not the side that we need to deal with is the training. Those people are okay. It's like they are contented where they are. Some of them are okay. They are good. They have been there for 25 years. What difference can you make? So those are the challenges. So I like you to, having said this, I like you to maybe say address one or two insights that will help us move forward. Thank you very much, sir.
All right. Very great. Very practical question. Mr. Rick has done consultation in this class, and I'm not charging him any naira for this, but
Ah,
I'll do.
good.
That's great. I believe we are all learning, and that's why Transformation College put this together to give us real-time um, information. So, like you said, you train people. The first thing you should know is that when it comes to money, very practically, money comes from value. So, when someone goes to school, when someone is being educated, like we keep joining this meeting, why? We are adding value. And that's one of the that's just one of the means of getting money everywhere around the world. So you realize that someone can, like you said, someone can is a carpenter, someone is a welder. They have a particular skill, and that's what brings them money. However, your business model is such that you have to train them. And what happens is, I'll give you two good advices. And I've given I was in someone came for consultancy some few months ago, and I told the person, this is what I do. I told the person, there are two ways you can approach it. There's one which is quite the challenging part, where the person says, I'm content and I'm okay, like you mentioned. So they don't see a need to upskill because training them, they might not even come for the training. It's literally a free training where you're going to give them free skills, just come and train. And these people will show up and you're wondering, what do you want me to do for you? Because at the end of the day, you are the one even getting the money. And when I talk about this, I talk about it with so much passion because sometimes it baffles my mind. That to me is a longer route. So what I do or I recommend is, for the most part, I employ them. It might sound ridiculous, but I dare say that's a better approach. So for instance, I have a tailor in my local neighborhood who is very good, but perhaps doesn't know how to brand himself because this I can't exhaust this whole topic on this call. You have to teach them brand elements, you have to go through a series of teaching, you have to take them through marketing, pricing, a whole lot. So what I do is that local tailor becomes my employee. Then now I start a business called Samuel Tailoring Ventures or Samuel Couture. So now, because I have the knowledge and I have the expertise, now people come to me. But one thing you should know is that I cannot sew. But because I have someone who can sew, I can pitch the business to people, get the customers, and now outsource to the local tailor who doesn't even know how much I price because some of them don't even have social media presence. So this example I'm giving you, one guy came to me, and that's the example I gave. He said, "Oh, he wants to go into sewing kaftans and these agbadas for weddings because he has realized that every weekend there's a wedding in Nigeria or in Ghana. So he wants to go into that business." I said, "Okay, sure." So I asked him, "Is he the one going to say?" He said, "No." "Does he have any knowledge on tailoring?" He said, "No." However, I told him, "You have to learn. I believe so much in learning. I do so many things. I have knowledge on everything. Not because I just want to learn. But I tell people we grew up for them telling us that jack of all trades, master of none. But you can be jack of all trades and master of all. And we can change the narrative. You can know everything. You might have to have a specialty, but you can have knowledge in all things. So real quick, let me answer your question. The guy came to me, so I gave him these two examples and he said, okay, he'll go for the second option, which is to start the business and then I'll source it to the tailor. Just last week, he called me that he has an outfit for me, a free outfit. So I asked him how business was. He said, wow, if he was taking the route of now teaching that tailor, it would have been a longer route. But now he has the brand, he's the owner of the company, he's the CEO, he's the whatever title you want to give him. And now he outsources the business. And now he has so many businesses because now he's able to make the business look more attractive and more appealing for people to patronize. So there are two different routes. And this is just a general counsel I'm giving. But maybe this one, you have to pay a small consultancy fee. That's just on the lighter note. But these are some of the ways to look at it. Just imagine you having all these artisans and coming up with an online platform where, let me give you an example. You can have an app, Mr. Rick, where all artisans are there. So if I'm in my house, from the comfort of my home, I can say I need a welder and I request for a welder like the same way we request for Uber on our phones. And then you dispatch that welder in that neighborhood to me. At the end of the day, the money comes to you. Will you believe that Uber has no cars, yet they make the most money? YouTube has no videos of their own, yet they make money. These days, I always tell people, work smart. Work smart. Thank you so much, Mr. Rick. I hope I've answered you. I've given
I,
you, I've given.
I thank you so very, very much. Mercy, I'm sure Mercy's on this call, she's hearing. I would want to take it further because you said something that actually I'm considering doing so, but when you mention it, it's like you just strike the chord for me. So I would request for a further consultation with you, honestly, on a very not on not on a lighter note now, but on a serious note.
Right. Thank you so much,
Yes.
Rick. Thank you so much. Please, any other question?
Let's see how we can pull this together
Yes,
and
please.
add flesh to what we already have. Thank you, sir.
Thank you so much. All right. In the absence of any other question, I think we spent a lot of time here. I don't want to keep you all day. I'm very grateful to Transformation College for this opportunity to share this brief knowledge with you on understanding money and financial institution. I'm very grateful to the director of Transformation College, and I'm grateful to Mercy as well for this privilege. And to all the students, thank you for joining. Let's go out there and make an impact. Let's go out there and impact our world. Let's make our world a better place. The next time I want to see you, I want you to be opening that shop to be starting that company, to be starting that industry. It's not far-fetched. It's not far-fetched. It all starts with your mind. So let's all embrace the knowledge we keep acquiring and keep making the world a better place. Do have a wonderful afternoon. Sister Mercy will take from here as I stop sharing my screen. Thank you all so much.
Oh my, please a round of applause. Samuel, thank you so much for such an insightful session. I really enjoyed every bit of it. And I know that there are lots for me to work on in my online business, right? Thank you so much. And I believe we have people like myself on the call. Like Mr. Rick said, Mr. Rick has always been on our programs. Thank you so much, Mr. Rick, uh, for always standing by. I enjoy every bit of it. Okay, please, before we continue, Samuel, please make me a co-host. You are now the host. I was knocked out.
Okay,
Thank you. So that I can stop recording. Then I move ahead. Thank you. All right. Thank you so much for that. So, like I said, Mr. Rick has been one of our students for a